what we do.
You gave a recent speech where you said you thought the labor market looked pretty solid. Give me your thoughts on that.
Yeah, I think it is solid. I think
Order filled.
relative to where we believe full employment is, the numbers are pretty good. And I think that there was definitely some cooling in the first couple quarters. Since then, literally within the last few days, we've met with folks around the district, and there's a lot more optimism going in the last couple quarters of the year. And so I kind of agreed with Chair Powell at his last FOMC conference that while the numbers seem softer, they seem to be in balance, kind of the supply-demand.
Are you seeing in the data at all any impact of changes to the immigration policies?
You probably have to assume that some of the labor data was affected by some of those numbers. I mean, even the administration talks about the successes they've had relative to the numbers and the decline of the numbers from a year ago. So you would think that that would be in the mix somewhere, but overall, with the supply and demand imbalance, we still came out with a 4.2 unemployment print.
So let's talk about the other side of the mandate, the inflation side. What are you seeing in the recent numbers?
It seems like that last mile is pretty hard, and I'm one of a lot of folks that believe that there is a real hard, true cost to that last % of inflation that's in the system. I think that we might see a tick up. I would say that it's probably the inflation number is probably closer to 3 than it is 2, and I think we've got some work to do. I think we want to continue to figure out how we keep pushing that number down toward 2.
Markets have baked in the idea that the Fed is cutting rates in September. Are they in a bad place now as far as you're concerned?
I think we've got a lot of data to harvest between now and September, and I think something will emerge where I think we'll start to see a little bit more definitive move one way or the other. Markets seem to be in good shape, spreads. So I think we're in a really good spot, and I think we really have to have very definitive data to be moving that policy rate right now.
So at this point, are you a person who could go either way in September?
We'll get around tables and we'll collaborate and we'll figure it out. But yeah, I think there's a lot to be said between now and September.
I'll just be honest, reading your last speech, you did not sound like a person who was in a hurry to cut interest rates.
No, that's probably fair.
You look around the economy and you don't see a whole lot of things that are restrictive out there.
Right.
What would tell you that there's restrictiveness going on, or that the Fed is overly restrictive relative to where it should be?
Yeah, I'm actually trying to find it. I mean, I really have been looking. I don't know exactly what we're restricting. I here again, the credibility of our anchoring on that inflation number to 2 is a very important piece of the dual mandate. I think we got to be careful about what lowering short-term rates would do to the inflation mentality if, in fact, inflation is still running closer to 3 than 2.
We have a big day tomorrow. We'll have full coverage of Chair Powell's speech, and then we'll talk with Cleveland Fed President Beth Hammack. On the Cook issue, we have asked the Fed for a comment from the Fed chair, and if the issue's been referred to the Inspector General. I also asked FHFA how they discovered the 2 mortgages that Cook has and whether other Fed officials are being investigated. Neither the Fed nor the FHA have responded at this time. Becky?
Yeah, Steve, we had a big conversation about that this morning. Look, you don't want to see weaponization of the FHA or the IRS or any other government agency. But it's also illegal to claim multiple properties as your primary residence. So I guess we have not seen the end of this. I'd be interested to hear if there are other officials who are also being looked into. I think yesterday...
In addition to Adam Schiff and Letitia James.
Letitia James. I think yesterday Bill Pulte said on Squawk on the Street that they had gotten it from a...
Money Matters. Money Movers? Media Matters?
Stop, you're confusing.
Money Movers.
Money Movers, yeah. Thank you. I think he said yesterday that it had come in as a tip. But again, it's complex, a lot of different issues there, and I would assume it's a much bigger topic of conversation behind the scenes at the Fed meeting there.
I heard the conversation at 6 o'clock, and I associate myself right with the center of what you guys were talking about. On the one hand, you know, you shouldn't do this. On the other hand, it seems pretty clearly that, you know, Cook was probably singled out. What's interesting to me when I was thinking about this, Becky, is, you know, Cook is not your most Fed person in the spotlight. It seems to me you go down a list and get to Cook. You don't start with Cook. And so there is a question as to whether or not other Fed officials have been investigated, whether the very concept puts a chill over the Fed on the other hand. And as she said in her statement, she did this before she was a Fed governor.
I don't know that that
excuses it.
That was a weird.
Agreed.
Yeah.
Right.
You know, I will tell you that I've reported these things, pardon me, over time with Rosengren and with Kaplan and other officials who got involved in not following the law exactly, and they've lost their jobs. And, you know, these are very difficult times for, at a time when the Fed is very, very focused on making the right policy with all the pressure from the president and these things going on. It makes it a very interesting moment right now for the Fed, and whether or not this pressure has an impact on policy is probably the thing that investors have to think the most about right now. That can Powell at this point come forward and say no rate cuts in September, and hold the line on that issue? Or is there just all of this pressure on him and the rest of the Fed to cut rates and give the president what he wants?
I was thinking about you earlier, Steve, as a former Moscow resident, when I was trying to figure out which Soviet-era person actually said, "Show me a man and I'll find you a crime." And it's attributed to a couple, to a judge named Vyshinsky, I like this one, to the head of the Soviet secret police. That's the guy you didn't want to mess with, Lavrentiy Beria. But some people even said Stalin said it, but there's no evidence of that. But
well,
that's
fortunately, Joe, this is not.
That's a bad way to run things. If you can, and it's not true for every person, but you can.
Right.
If you look deep enough, you might find something. You know, the other expression is "show me a neck and I'll show you a collar."
Right, so this is not yet Soviet Russia, Joe. Not, you know, so.
According to
Lisa
Sonnenfeld and others, it is.
Well, Lisa Cook still has a say in this, and she'll have a chance to defend herself.
Definitely.
And I think before, you know, before we jump to judgment, there are these issues out there that do need to be addressed. She'll have to address them in one way or another. But before we jump to judgment, I mean, the evidence does look, you know, difficult to understand. There are, however, as I understand it, if you look on the HUD website, there are reasons why you can claim two primary residences. I don't know that she qualified for any of those. Yeah, there's 5 different reasons, and I don't know if any of them. Things about like call it up. I didn't study it, but there are 5 reasons on the HUD website as to why you can actually claim that dual primary residences. But that said, the mortgage people I've talked to said you basically cannot do it unless there are these exceptions out there, and they seemed kind of rare. I don't know that any of those existed, but the main thing is, in response to Joe, she gets her say. We have a process here, a judicial process, and we'll follow that and figure it out from there.
No, why is that in reference? I was arguing your side of it, that you can find something on anyone if you're out to get them. That's what the Soviet expression means.
Right.
Yeah, no, I agree with that, Joe. I'm agreeing with you.
No.
Can you not take yes for an answer?
That didn't sound like a yes. That sounded like that I'm assuming she's guilty and she's going to have her day in court. That's not.
Does it matter who filled out the form?
And do you have to be like a split personality to live 2 places? Maybe you got to be.
What if you're married and one partner lives in one place and one lives in the other?
Yeah, that was one of the things in there, Betsy, was about marriage and
the shitty marriage.
And there's divorce. And guys, I'll tell you what I hate about this. Can I just tell you real quickly what I hate about this? Lisa Cook is a very accomplished economist, top in her field in some of the things she studied. And I have seen this happen in the media over many years now, which is a person who has done very awesome things in their life becomes known for this thing.
Well, this is
Lisa
why it's
Cook
so dangerous to go into the government or politics or any of these things.
Yeah.
This is why so many people don't want to either take a federal job or go into government, because you do get boiled down to whatever headline comes out or whatever you get pinned with or tagged with that is not who you really are in whole. And we all understand that. It's, you know.
And let's not forget, Becky, that Lisa Cook was involved with approving and supporting the raising of rates in the Biden administration to combat the inflation that we had up to 5 3/8 during, what was it, 14 months of the Biden administration. So the idea that she has shown some, political bias in her in
but
her
Steve,
votes, I think is
finally,
wrong.
What? Yeah, inflation gets to 9%. You finally decided they were way too late. Someone was saying that yesterday. That I think somebody was saying, well, look, Biden was let the Fed do what it needed. I mean, by the time they raised rates, you can't say that was that they weren't. Prior to that, they could have been subject to political
Joe, I
pressure.
have a slightly different take on that.
I'm sure.
I have a different take on that,
we
Joe.
do on everything,
which
but-
month? Tell me which month the Fed was. I think they were 3 to 6 months late, and whether or not that would have headed off the inflation. But some people say way late, like they were a year late or 2 years late.
I don't
If you
know.
think about the idea that
can't remember
when the inflation really showed itself, we were in the middle of a massive pandemic, and the second round of it in December of 21. You know, I'm not sure the Fed was supposed to be hiking interest rates into the second round of COVID. That's really my issue with that, of how late the Fed was. Does Powell think they should have raised earlier? Yeah, in hindsight, for sure, they should have. It would have been great and better if they had. But the amount that they were late, I'm not sure is as consequential to the inflation outcome as people have made it out to be.
Okay, it's a lot to think about. I appreciate you listening at the top of the show and playing along to continue the conversation. Steve, it's great to see you, and we will continue to watch throughout the day with all of these great interviews coming up from Jackson Hole. Squawk Box will be right back.
I can't wait to see their faces when we go out.
What seems to be the problem, soldier?
The belly's full of Greeks.
Sneaky cowards.
Innovation changes everything.
Send it back!
With one investment, you can access the NASDAQ 100 innovators who are rethinking the world. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at investment.
Your record label is taking off, but so is your sound engineer. You need to hire.
I need Indeed.
Indeed, you do. Our advanced matching helps find talented candidates so you can connect with them fast. Visit Indeed.com/hire.
It's a rare thing when someone you've been with for so long finds a way to surprise you. It's like discovering E-Trade's easy-to-use platform now comes with the power of Morgan Stanley.
Mom can speak walrus?
My name is Josh Brown. Everyone needs to invest. We're going to show you exactly where the best stocks are and what's happening with them in real time.
Join Pro for exclusive access to Josh Brown's best stocks in the market at cnbc.com/best stocks.
You can have whatever you want for a price. Latest trend? Sure. But don't expect it to last.
That's not how we do it.
At Marshall's, our buyers hustle 24/7, so you never have to compromise on quality or price.
I'm impressed. Let's talk numbers.
We're getting you a better deal because at Marshall's, we believe that everyone deserves the good stuff.
I have Usher syndrome, a rare condition that's causing me to lose all of my vision and hearing at the same time. I'm a fighter, trying to hold on to what I still have. But I can't do it alone.
With USPS Ground Advantage, it's like you're with us every step of the way.
Right on time.
Stay in the know from your dock to their door.
Coming up, seized by the U.S. government, now on the auction block. A $300 million mega yacht, once owned by a Russian oligarch, could be yours for a bargain. But it all may not be smooth sailing for the buyer. We're going to explain all of it when Squawk Box comes right back. Don't go anywhere.
At Interactive Brokers, independent RIAs work with the best research and trading tools designed to help them outperform the markets. Meet them at Interactive Brokers Investors Marketplace for advisors. Advisors at Interactive Brokers keep all they earn on our low-cost platform, with no ticket fees or custody charges, low margin rates, and high interest earned on idle cash. To get better results, get a better platform. The best informed investors choose Interactive Brokers.
Order canceled.
Decking and railing that stands up to whatever you ask and bends to your every whim. Trex, performance engineered for your life outdoors.
Life is always changing, and our Lovesac couch adapts to it all. Gathering around for game day one moment, reconfiguring for entertaining the next. And tomorrow, a new look entirely. Because Lovesac adapts to life, our life.
No application fee if you apply by September 3rd at University of Maryland Global Campus, offering online and hybrid courses and lifetime career services. Learn about our more than 135 degrees and certificates at umgc.edu.
My world is in constant motion. The gym, the airport, the spotlight. I've learned that when I'm comfortable, I'm able to slow things down. Vuori DreamNet moves with me, stretches as I stretch, and keeps me steady through it all. So even though I'm always on the move, it's the comfort of DreamNet that keeps me grounded.
Welcome back to Squawk Box. A $300 million mega yacht that once belonged to a Russian oligarch going up for auction, but potential buyers may be more than they bargained for here on the high seas. It may cost them, is really the issue, I think. Robert Frank is going to join us right now. The only one who knows all about the yachts. Tell us. Tell us.
Good morning, Andrew. Well, the U.S. government is, in fact, auctioning off that $300 million yacht that it seized as part of its crackdown on Russian oligarchs. The yacht is called Amadea, and it was seized by the Justice Department off the coast of Fiji shortly after Russia's invasion of Ukraine back in 2022. And it was all part of that global capture of dozens of yachts, villas, art, and private jets that were taken by governments to pressure President Putin and his money machine at the time. But now, most of these assets are sitting in legal limbo and costing taxpayers millions of dollars. The U.S. government says Amadea is owned by Suleiman Karimov. He is, of course, the sanctioned Russian billionaire. The holding company for the yacht, however, says it's owned by another non-sanctioned Russian, so therefore the seizure was illegal. Now, the government has spent over $30 million of taxpayer money to maintain this yacht and its crew. It's now docked in San Diego. A judge approved a sale finally in March. It's now being sold at auction that ends on September 10th. Bidders, if you're interested, have to put up a $10 million deposit. Yacht brokers tell me that potential buyers are leery of buying a yacht that could be subject to a legal claim by a wealthy Russian. But for those with deep pockets, good lawyers, maybe guns, and lawyers, and money, Amadea is 348 feet long, sleeps 16 guests and 36 crew. It's got a glass elevator serving 6 decks, a chromotherapy pool, I don't even know what that is, 36-foot infinity pool, a nightclub, marble fireplaces, helipad, and a winter patio dining room inspired by an alpine conservatory. It also has a ton of gold inside, so much gold that
like
gold furniture,
gold furniture,
so much gold that I thought maybe, somebody could gift this to the president. We could get a presidential yacht back.
Who put that much gold into a yacht? Don't they know that gold is heavy and sinks? Are you stupid?
The Russians particularly put not just gold, but a lot of masterpiece paintings on their yacht. And so part of the issue is climate control. What reason it's so expensive for these yachts to maintain. $600,000 a month it's cost U.S. taxpayers to maintain this yacht. So
are they taking the art off the yachts?
No.
They're leaving the art.
They're leaving the art
on the yachts. Why do they do that? Why wouldn't you just take it
Sound like
because then
a banker and like split them up here.
Yeah, I think it gets complicated in terms of confiscating property and where it is. So you're keeping it all together, and
I'm just thinking I could save money on the air conditioning.
Yeah.
If I move the.
Get rid of the.
If I move the art.
It's docking fees, insurance. I mean, these boats are incredibly expensive.
This sounds like a flipping opportunity because I don't know if I'd want to keep one of these things and then have somebody really mad at me.
And that's probably the only thing you're going to be. They'll probably buy it, they charter it, keep it close to the U.S., and then eventually sell it at some point when there's a resolution around the ownership. But it's going to sell for a lot less than $300 million. That's for sure.
Okay. Robert, thank you, sir.
Thank you, guys.
Nice to see you.
All right, check out shares of Walmart. The Dow component on the move this morning after its results that it reported earlier this morning. Right now, it's down by about 2.8%. We'll talk to an analyst next about how to interpret these results, what it means for the consumer, what we can read into the economy and tariffs on that. All of this when Squawk Box returns.
Your shipping manager left to find themselves, leaving you lost. You need to hire.
I need Indeed.
Indeed you do. Sponsored jobs on Indeed are 2.5 times faster to first hire. Visit Indeed.com/hire.
Rather than get rich quick, I believe in get rich slow. The high-yield cash account at Public actually had higher rates than anything else I was able to find online. I don't want to be losing sleep over having made risky investments. I needed something stable that could really give me long-term financial benefits. I know my money's working hard for me, and I know I can access it anytime I need it.
The evolution continues. Introducing the all-new Odeon. Peter Millar.
I like things personalized, like my coffee. So when my doctor prescribed Vyvgart Hytrulo self-injection for my generalized myasthenia gravis, we personalized my treatment goals.
Vyvgart Hytrulo can improve daily abilities and reduce muscle weakness.
It's my treatment, my way.
Vyvgart Hytrulo for a weekend away, Steve.
It's travel ready and can go where I go.
Self-injection fits my plans. Do not use Vyvgart Hytrulo if you're allergic to its ingredients. It may increase infection risk and cause serious allergic or infusion or injection-related reactions. Tell your doctor if you have an infection, fever, recent or planned vaccinations, allergy history, or kidney problems. Most common side effects include respiratory and urinary tract infections, headache, and injection site reactions.
My Vyvgart Hytrulo self-injection.
Reducing my symptoms.
That's treatment my way.
Ask your neurologist about Vyvgart Hytrulo.
At Hawaiian Bros, we're always piling on the fresh, gotta have it, island-inspired flavor. Now for a limited time, get a small plate lunch and a medium Coke for just $10. From our 16-hour slow-roasted, pulled-to-perfection luau pig to the melts-in-your-mouth huli-huli chicken, every bite is made fresh. How fresh? No freezers, no fryers, and no microwaves here. Get your $10 combo today, only at Hawaiian Bros.
If you're a pro, you know that top quality Behr paint and Kills primer are available at an everyday low price only at the Home Depot. You know there's only one place to get the best value, service, and durability you deserve. And now you know you can get both Behr and Kills products delivered same day, next day, or whatever day you need, free of charge. Behr paint and Kills primer, available exclusively at the Home Depot. If you're a pro, you know.
All right, welcome back, everybody. Walmart earnings are out this morning. The company reporting adjusted earnings of 68 cents, which missed expectations. However, there were some legal expenses in that might not have been expected by all the analysts on the street. Walmart raising its full-year outlook, even saying that costs from tariffs continue to rise, but it's still raising its outlook, and that stock right now down by about 2.8%. Joining us right now is Corey Tarlow. He is Jefferies' VP of Equity Research. And Corey, let's talk this through. You've seen the numbers. What was your takeaway?
So my main takeaway from this is really it's all about the top line. And Walmart
revenue was up.
The revenue was up. Beat expectations. Same-store sales were close to about 5% for the U.S. business. Consensus was about 4%. So that's a pretty sizable beat. The question, though, is that coming at the expense of margin?
Yeah.
And what the company is doing is they're investing in lower prices to drive market share. So that's
the same thing we've heard from just about all of these big retailers, Target, Home Depot, Lowe's, all of them kind of doing the same thing. They don't want to lose market share right now. And
correct.
So as a result, they're chasing that by eating the higher costs.
Correct. I think it's a question of magnitude, though, specifically with Walmart. What we've seen in our data is that their pricing basket versus Target, which you mentioned, because we did a back-to-school survey, is about 8% cheaper at Walmart than what you find at Target. So I think it's about Walmart.
How does that compare to a year ago? Because I think of Walmart as always having the lowest possible prices for consumers. That's what they advertise.
So their prices are on the back-to-school items. There's about several thousand back-to-school items where they just kept prices flat.
Okay.
On a like-for-like basis, though, across their entire box in the U.S., pricing's up about 3%. That's versus about 2.5% in the first quarter of this year.
What do you think about the sell-off in the stock this morning? I mean, look, this is a stock that has been an excellent performer. It's trading, I think, 36 times forward earnings. It's down by about 2.75% this morning on this. I don't know if that's because people perceive this miss on the bottom line as something more than just one-off legal expenses, or if they worry about something else they see here. What is your thought?
Well, I'd say, firstly, they didn't guide. So because they didn't guide and there really wasn't much of a barometer for where the numbers should shake out, they've now reinstated next quarter guidance. So we have the 3Q or Q+1 guidance. We have the full year guidance, which was raised on the top line and on the bottom line. So there's definitely better visibility, better trends in the business overall. Which I think speaks to the fact that this is a business that's moving in the right direction. It's gaining market share. Margins should go higher over time. There are really core long-term drivers that I think should accelerate profit over time. Margins are 4% today. They could go from 4% to 6% longer term. And that's really driven by advertising, fulfillment services, data ventures, and membership like Walmart Plus and Sam's Club, as an example. So these are kind of the drivers that are really just going to keep accelerating the business longer term, and that's why I would buy the stock on the weakness today.
You have a price target that's the high of the street, $120. That's a 20% increase from here. That's the next 12 months. You anticipate that happening?
I think that's very reasonable. It's going to be driven by higher numbers and potentially a higher multiple, too. There's a scarcity value, I think, of retailers that are actually gaining significant amount of market share today. One is Walmart, the second would be Costco, and the third would be TJ Maxx.
How much of this is Doug McMillon's leadership?
I think it's a really big component of it. I actually had lunch with him about 2 months ago, and we had about an hour and a half together, me and several other people at about an 8-top table, and we spent about the first half hour about all the changes that he's making on the tech side of the business. That's
I don't think people think about that as much. Everything from advertising, that was a stealth business that he built up.
Yeah. I think that there's a lot there. So we actually dimensionalized what that tailwind could be over the next 5 years. And just to put this in perspective, this company did about $30 billion in operating profit last year. We think that with AI, automation, and advertising, that EBIT number of $30 billion could accelerate to $50 billion over the next 3 to 4 years.
What does that mean in terms of employment there?
So I'm really glad you asked that. That is a great question. So our perspective on this is that Walmart is a $680 billion retailer today. Over the next 5 years, they're going to be adding $130 billion in revenue. And wow, is that impressive? But what's even more impressive is that they're going to do that on a flat headcount.
Right, so that's the big issue.
But you can't lay off people when you've got so many customer-facing businesses, the people who have to be in the stores.
It's about augmenting the current employee base with technology to help to make the business more efficient. So, for example, I've walked through a number of Walmart's distribution centers, and they are works of art.
I've gone through a number of their stores recently and asked people questions, and sometimes they'll use a translator to try and first figure out what I'm asking them, and then try and figure out if they can find what I need from the back office. I mean, it does look like they're using technology in a lot of different ways.
It's really about two key ways. One is customer-facing, and then one is sort of employee-facing. On the customer-facing side, a lot of time that I've spent with the CEO is very focused on, for example, Walmart's app. So if you load Walmart's app today, right in the center of the app, there is a functionality called Sparky. It's essentially a generative AI chatbot that can help you to generate a basket and then ultimately use predictive...
It's like Clippy?
Precisely.
From Microsoft?
It's sort of like that, but it's in the earlier days. And over the next, I think, 12 months, the shopping experience on Walmart's app could look very different than what it looks like today.
Okay. Corey, thanks for coming in today.
Thank you.
Folks, it is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin.
All right, let's check the futures. Not great so far. You can see that there is some red ink. Walmart's not helping, obviously, as far as the Dow goes. For more on the markets, let's get to Mike Santoli at the New York Stock Exchange. Hey, Mike.
Hey, Joe. Yeah, continuing to churn here. A few days down in the S&P 500, although yesterday we did have this intraday comeback in some of the hardest hit areas. Everyone's talking about this sort of reversal of the high momentum trade. We came into August, the index somewhat overbought, kind of highly concentrated once again, obviously knowing about some tendencies towards seasonal weakness. And we're down about less than 2% off the record highs. It's mostly been about rotation. The market's trying to get away with letting the hottest parts of the market cool off and maybe have some of the laggards pick up the slack. I have the 50-day average in here. That's not too far down from here, maybe a couple percent. This is the old high from February. That was the first kind of momentum unwind trade that caused a bit of a pullback in the overall market. And we're up just a few percent from there at 61.44. I would look at 6,200 as an interesting spot if we get a further pullback where it settles out. That's been the low for August, basically the July-August range. Now, take a look here at one way to measure those high momentum stocks relative to the broader market. This is the IBD 50, Investors Business Daily. So these are stocks with the strongest fundamental momentum, sales and earnings going up strongly, strong stock uptrends too. So it's technical and fundamental. You see how dramatically overbought relative to the equal weight S&P we were back in February. Similar distance from the average stock now, although it's not as steep. It was actually a little more of an orderly uptrend. So we'll see if this still has to be kind of reconciled as the market rebalances itself right here. Obviously, you know, Jackson Hole coming up, NVIDIA earnings next week, last week of August. Lots of reasons for investors maybe to just take a half step back on risk. Take a look at one of those laggard areas that has woken up. That's healthcare. So this is the broad healthcare S&P ETF. And you see it's at an interesting spot here, right? It's sort of, you know, threatening maybe to get out of this trough, out of this lower range right here, but not yet proven that this downtrend is in fact broken. So, you know, maybe a little more to prove right there as folks have migrated into some of the cheap looking things like pharma and healthcare services, guys.
It's late August.
Yeah.
And September's coming, and
which means October.
Which October's after September. I mean, it's like clockwork. We were talking about the possibility of the seasonal things coming into play. They always seem to. Mike, is this the beginning? May not be.
No, for as much as you feel like, well, how can this possibly be an edge in the markets to observe where the calendar is and say that the market's going to do something because of it? It seems to at least create this overlay. Now, it doesn't mean it has to be great in magnitude, and maybe we did just kind of take some of the pressure off the most overheated parts of this market, and we can settle out from here. But a lot of things have to fall into place right here. You do have a market that's, you know, pricing in is still a pretty high chance of a Fed rate cut. We're not quite sure we're going to get affirmation of that. So there are specifics in addition to just these seasonal ebbs and flows, which do seem to restrain stocks around this time of year.
Okay. Mike Santoli, thank you, sir. Meantime, take a look at this because Palantir shares bouncing back slightly this morning after sliding over the last week. Year to date, the stock is up more than 100%. But we'll show you what's happened this week as well. Join us right now is Tyler Radke, Senior Equity Research Analyst at Citi. Good morning to you.
Good morning.
Is it overbought? Is it oversold?
Well, this stock, even despite its slide, is still trading at around 70 times forward revenue. So it's very much on the high end of valuation range, really across the broader market. But look, I mean, they had outstanding Q2 results, one of the biggest beats and raises we've seen from a public company. The cash flow margins are on their way above 40%. So kind of this combination of growth and profitability. People talk about a rule of 40. They are kind of in the rule of 80, rule of 90. So really outstanding momentum. I just think given the run in the stock, you've seen this across the market.
Order
even Microsoft
submitted.
blowout numbers, the stock has traded down ever since. I just think it's a bit of repositioning, some of the August volatility you talked about.
Right.
We're still constructive on many of these AI winners. I think just for Palantir, just the track record of buying these high multiple stocks at these levels hasn't been great.
Well, but Tyler, the question is this one of those stocks that effectively the company grows into this price? There are really, we talk about Palantirians who just love this company. How much of this is almost like Tesla in that way?
Order submitted.
For sure. And look, I mean, we've been wrong on the call up until this point over the last 2 years, but ultimately, I think to have confidence longer term, you got to believe what they do and their moat is durable. So the reason I think they're winning today is every organization around the planet is trying to get started with AI. And before you can deploy a model or an AI application, you have to get your data in order. So I think Palantir's data ontology product, which is their flagship product, it helps big businesses, governments around the world, they've gotten in the door very effectively with that. Even internally, large banks, you're starting to see good usage of that. I think over time, the rest of the industry is sort of following their playbook, right? And so just the what you have to underwrite from these levels, and given how fast the market is changing, that just the risk reward is just not something we're particularly excited about here.
Tyler, if you were to identify one single company that you think competes with Palantir in this way, who would it be?
So I think the closest ones would be the hyperscalers. But the reality is Palantir is a unique company, right? It is a combination of a software company and a services company. And so there's not really a true head-to-head overlap. I mean, no one is putting up the numbers close to them. Again, the hyperscalers, you look at Azure, they're growing.
But I'm not really talking about the numbers. I'm saying about who else can organize your data as efficiently as they can, and how much of a moat and advantage do they have in that product than anybody else in this moment right now?
Yeah, so I think the answer is there doesn't appear to be an obvious one today, but what about down the road, especially as you start thinking about what AI can do in terms of organizing your data and doing that, data ontology. Again, Palantir's leaning into AI. We think they're doing an excellent job. But over time, you combine the resources that everybody else has out there, plus the power of this technology. It's unclear to me if that edge is sustainable, especially as we get into more AI use cases moving into production, adopting LLMs. Again, I think this data organization phase that we're in, that's going to evolve. That's kind of the early stage of this AI market.
Okay, Tyler, we're going to leave it there. Thank you so much. Appreciate it.
Thank you.
You bet.
Okay, coming up, a number of Senate Democrats asking the president to walk back his stance on selling chips to China. Senator Chris Coons signed that letter, and he will join us right after this break. And then bringing drug manufacturing back to America.
Order
a new
filled.
plant opening in North Carolina as the president pushes to reshore pharmaceuticals. We've got the details straight ahead. Squawk Box will be right back.
I can't do it! This gap! It's just too big!
Bring on the double.
Affleck!
After my hospital stay, Aflac helped close the gap by paying me cash for expenses health insurance didn't cover. Nothing covers gaps better than the Aflac duck.
Get help with expenses health insurance doesn't cover. Find an agent, get a quote at Aflac.com. You do look like me.
Nobody's born with grit.
Rose is really struggling.
It's something you build over time.
It's 21 missed cuts in a row.
For 89 years, Morgan Stanley has offered clients determination and forward thinking to create the future only you can see.
Rose, back in the winner's circle.
Meet Luke and Jason from Fire Department Coffee. Two guys with a dream and a little help from Walmart along the way.
We make coffee that supports our community.
And Walmart's played a big part. You know most of what Walmart spends goes to products made, grown, or assembled right here in the U.S.?
So we can invest back into our community.
Walmart, huh? Who knew?
Now you know, Jerry.
Order
and that
submitted.
is how you brew a mighty fine American business.
Today, let's paint with Behr, America's most trusted paint brand.
Wait, we don't have Behr.
Do we Order need that? Filled.
Order filled.
So here's a paint and primer?
It just says ain't.
You bought ain't.
Well, with Behr, you can paint a
Order
whole room
submitted.
for under $100. How much did you spend?
Like a lot more.
Oh,
I thought you said you researched this.
Aren't all paints the same?
no, they're not.
Order filled.
Order filled.
Don't overpay for your next project. Get Behr quality at an everyday low price. Only at the Home Depot.
If you know luxury, it's not just award-winning, it's rewarding. Sattva Mattresses supports all types of sleepers. Luxury is handcrafted and assembled in American factories and brought directly to you with our complimentary in-home delivery and setup service. Which is why over 90% of customers would recommend Sattva to friends and family. Sattva, luxury mattresses made affordable.
A group of Senate Democrats writing a letter to President Trump asking him to walk back his deal to sell chips to China, saying the following: the willingness displayed in this arrangement to negotiate away America's competitive edge that is key to our national security in exchange for what is, in effect, a commission on a sale of AI-enabling technology to our main global competitor is cause for serious alarm. Joining us right now to sound that alarm, Delaware Senator Chris Coons, who signed that letter. Good morning to you, sir.
Good morning, Andrew. Great to be on with you, and I appreciate your highlighting this concern spread across a number of senior Democrats about the decision to allow NVIDIA to export its nearly cutting-edge H20 chip, which is capable of doing a fair amount of advanced AI work to China.
Okay, so here's my question to you. Do you believe that somehow there was a shakedown from the White House and that because these chip makers are giving money to the government that we've effectively, or this administration has decided to put the national security issue aside? Or do you believe, as I think supporters of this administration would say, was that there was a conversation that was had about the idea of the trade-offs between, providing H20 chips to China and potentially, therefore, pushing out market participants like Huawei and others? This would be the argument in favor.
Yes.
And that is actually a reasonable choice.
Look, I've heard the argument that what we want to do is to have U.S.-made chips end up becoming the standard chip for AI, and thus making sure that NVIDIA's technology ends up being more broadly adopted.
That doesn't sound crazy, does it?
That does not sound crazy. But here's the core challenge. Recent advances in China through, for example, DeepSeek, genuinely surprised American technology leaders and national security leaders, and so too their advances in chip making. And I think we have a basic policy tension here between trying to work even more closely with our core allies in Europe and in Asia to constrain China's access to the most sophisticated and advanced chip design and chip manufacturing technologies, or to frankly compete and try and flood their market. I'm not sure that latter strategy is going to work or work well.
Order filled.
Order filled.
There's two issues here. And the question
Order
is, let's just try to
submitted.
separate them. There's one issue, which is the issue you raise in your letter, about effectively taking compensation for these chips and what that's about. And we can have a conversation about industrial policy and the way the administration's approached that. And I think there's a separate issue, and they're often getting conflated now, about national security. Let's just go straight national security, and then we can get into the economics of the industrial policy element of it, which is to say, you believe that we should not be providing these chips at all under any circumstances.
Well, look, what I'm concerned about today is press accounts that NVIDIA is continuing to develop farther and farther cutting-edge chips for export to China. Obviously, this is a race for whose technology and whose standards are going to govern in the 21st century.
Order filled.
And I want free markets and free societies and democracies to have the upper hand against an authoritarian regime like the PRC that is trying to embed their systems and their technology into everything.
Senator, we asked Treasury Secretary Bessent the other day when he was on about this, and he very forcefully said these aren't the most advanced chips anymore, the H20. And then what's the next one, Andrew? So what about the next one? Is that going to be part of what they're allowed to sell to China? He said, that's not me, that's commerce, and you'd have to ask Secretary Lutnick. But if it's not the most advanced chip, if we're giving them the crappy chips and getting 15%, does that change? Not crappy, but not the most advanced chips. Does that change your calculus?
It would be a factor,
Order
Joe.
filled. Order filled.
I do think that
Order
H20s
submitted.
are far from crappy. They were cutting edge just a year or two ago.
That's a
but
lifetime.
Let's
That's so
agree.
2024.
Joe, let's agree with the point that we shouldn't be giving China
Order
access to the most
submitted.
cutting-edge
Order
technology.
filled.
Order filled.
We continue to have world-leading technology
But
in
Senator,
a few
let's just
key
get into
areas,
the-
but
let's
the
just get
Chinese
into the
are racing to catch up with us.
But let's just get into the technology itself. So Huawei builds its own chips. And what they have done, to the degree you believe it, to get even halfway near what NVIDIA has done, is they have effectively daisy-chained a whole bunch of their chips together. That's what's really happening here, right? And then you have effectively NVIDIA on the other end of things where you don't have to do that. But you're not getting the most advanced version of it. So at some point, you'd prefer to effectively push out the Huawei chips if you could, no?
I would prefer to make sure that we have the talent, the institutions, the capital, and the approach to markets that's going to win in this century. The Chinese have pulled off a remarkable feat of engineering, as you described it, to daisy chain lower sophistication chips into a competitor product. And their recent advances in open model AI have been genuinely impressive. One of my core concerns is that we need to be making sure that across talent, capital, and technology, we are closely aligned with our best partners. I just led a bipartisan delegation to Australia for a conversation not just about nuclear-powered submarines and our conventional defense, but about where are we going in AI, in quantum computing, in precision biology, and making sure that across countries like Korea, Japan, Taiwan, Australia, the United States isn't pursuing policies, whether it's in tariffs, immigration, tax, or other issues, that divide us from our most promising partners, because it's going to take all of us, all of the advanced democracies, to compete and win in this very difficult area of artificial intelligence.
Senator, let's bring up the point of where Congress stands right now. It did seem for at least the last 8 years even, maybe, that both sides of the aisle were pretty unilaterally thinking that China was the enemy, that much more needed to be done, that they can't be trusted, that they are a threat to our national security. You all passed a bill on TikTok saying that TikTok could no longer be here. It still exists, as the president has extended that. And there are a lot of people who look at some of the moves from the administration, the current administration, and say, hey, they are much more focused on trying to get economic issues in place, like tariffs, like fair trade from their perspective, than they are on some of the security issues. And maybe those security issues are taking a back seat. Is that the case with Republicans in Congress, or is there still a united front in Congress saying hey, we're far more concerned about the security issues.
Well, Becky, that's a great summary of some of the current tension between President Trump's efforts to get a deal with China and widespread concerns among senators I talked to that China remains our principal competitor and will be for this century. We've
Competitor
got real
or
concerns.
enemy? How do you see it? Because you can be an economic competitor, but do you see them as a defensive threat to this nation?
Yes, they are an adversary of the United States. The Chinese Communist Party, under the leadership of Xi Jinping, intends to be a hegemonic power, not just in their immediate region, but globally. And they are building the Navy, the Air Force, the missile capabilities, the nuclear capabilities to push us out of a leadership role globally. They are rewriting the standards for global commerce. They are using every tool of national power. One of the positive things I think about Australia, as an example, is that a decade or more ago, as a democracy that is a robust economy, that's a very advanced society, they were uncertain about whether their future lay with being more aligned with China or more aligned with the United States. The Chinese then really went after them and with overt and covert efforts tried to influence their politics, tried to economically coerce them through trade actions. And across the political spectrum, Australia's leadership has chosen to stand up to China and to align themselves with the United States.
Senator, I got to ask you just a different question real quick, which is this. On the Intel situation, you were a huge proponent of the CHIPS Act.
Yes.
And
Winning.
And President Trump is saying that he's going to effectively take equity from Intel and possibly others.
Ooh, it's pumpy.
For the grants that have been provided. That was not the original deal, as you know. Do you believe that's the appropriate way to approach this? And what do you think about that policy?
Well, look.
We got 6 minutes. Let's see. It's pumping up now.
To embrace what had long been discarded as industrial policy, to make loans and grants because of the critical role that semiconductor chip manufacturers and designers play in our national security and our economy. I'm not clear what's the upside, what's the benefit for taking an equity position in Intel against the risks. And I do think that the president should consult with Congress, and we should have an open conversation about what's our goal here. When we took positions in major financial institutions after the housing collapse and the Wall Street challenges of 08-09, when we took positions in major auto manufacturers, there was lots of pushback from folks who said the government shouldn't be taking major positions in private sector companies, and we should do so only to stabilize them and exit as quickly as possible. So I think there are risks and rewards to possibly partnering through an equity position, and we should approach it cautiously.
I like that. Their position is softening. I like that. That's like a stock chart. It's building a base. It's looking at it looks like a coiled spring. Senator, before we let you go, I know that during the confirmation of Lisa Cook, you were quite effusive in your praise. You've known her for 3 decades. Just care to comment on this latest controversy?
Look, what makes me concerned about this ongoing effort to pressure the Federal Reserve is that President Trump has recently demonstrated that when he doesn't like the numbers, he will fire folks. His firing of the leader of the Bureau of Labor over softening economic numbers reminds me of someone who says, I don't like my weight, so I'm going to break the scale. And I'm concerned that what may be happening here is that Bill Pulte from FHFA is trying to work for President Trump in pushing out members of the Fed. Preserving Fed independence is important for our economic stability and security. Globally, we are the leading capital markets, and in countries where the monetary policy is controlled directly by the executive, by the elected officials
We
of the
have
country,
3 minutes. Go.
I have confidence in Lisa Cook. I've known her for decades, and I'm concerned about the trajectory here of trying to put a thumb on the scale.
Senator, my question to you, though, is if in fact she did something illegal, A, should she continue to be in this role? And B, does it matter how this allegation came about? Meaning, The question, of course, did it come from a tip or a whistleblower?
Oh, dang, it's dropping now.
Did somebody inside the agency decide to start to look at her? Are they weaponizing effectively these agencies? Does that change the dynamic for her if, in fact, she did something wrong?
Of course, it is and should be a concern for all Americans if access to our data by the IRS or by a federal housing finance agency are being used explicitly to target people for political ends. One of the alarms I raised about Doge and Elon Musk having access to huge amounts of personally identified information of Americans is that it might be misused for political purposes. And in previous cases where there were allegations that whether it was the IRS or something else was being used.
Answering Andrew's question, it doesn't matter if it was gotten by these means. Can you hate the process, but still, does it matter if something illegal was done?
There should be accountability for illegal acts, but it does matter how that information is gotten. Both can be true.
Okay.
Oh, I hope it doesn't dump. I really do. Hope it pumps. Give it like a big pump, then it can dump. It's almost time.
Trucks, performance engineered for your life outdoors. We buy low, sell high. Jump on that trend. Ride the wave. That's not how investing works. Well, isn't one a bet? Luck.
I'm sleepy.
We're Mizuho. Sound familiar? Financing the aluminum giant, building better homes? Mizuho was there. The merger of two logistics titans? Also us. Anywhere an industrious company needs a corporate and investment.
Alright, 1 minute.
Mizuho. This moment. Story time for Sarah. It means everything to them. And to all of us. At Evernorth, we make complex care journeys simpler with comprehensive coordinated care for better patient
Oh boy. Here we go.
Grandma doesn't spend all day at the infusion center. She gets her treatment at home with Evernorth's specialty pharmacy, Accredo. So Sarah never misses story time. Evernorth Specialty Services, because every moment counts.
I never considered myself.
It wants to dump, but I don't know. I might be wrong. I do 10 seconds before the data.
Most people don't realize
Order filled. Order filled. Order filled. Order filled.
Alright, here we go.
Order filled.
The fucking... Oh, come on. It chopped out. I blew all 4. Wow. Yep. Blew it up.
social content. See, goggles ain't goggins. They don't belong on the goggins. Doors bring us together.
That sucks. Yeah, it didn't move at all. That's a big waste of money. Yeah. Shitty data. Should have waited for NVIDIA, but that's too long.
Santella here live at CME HQ with the breaking news on this Thursday morning. Initial jobless claims for the week of August 16th expected up 225,000, comes in a little bit high, 235,000. Still well behaved historically, under 250,000, but it is the biggest level going back to the third week of June. On continuing claims, indeed, this is the...
See that? All blown. Yeah, don't trade news. Waste some money.
And finally, Philadelphia Fed Business Outlook. This is an August read. Expecting a number between 6 and 7, comes in -0.3. So basically about the smallest negative number you can get. And that was count back to June when we had -4. We also had -4 in May. In April we had -26. So yes, this hasn't been running all that great. The high water mark for the year was January, and January's read was the best in 4 years. So we have seen some deterioration. Interest rates on that, well, they moved up and down just a bit, but as the dust settles at 4.29, we're exactly unchanged on a 10-year. At 3.74 plus, we're basically down a half a basis point.
Yeah, this is cheap, so I don't care. It's $26 each, so it's not bad.
Fed fund futures, they went from basically slightly over.
I'll be back before market open.
At the September meeting about a week and a half ago to where they stand now, a whisker under 80%. So over the last couple days, we went from kind of 84 to 83 to a little bit under 80. And the reason I bring this up is because I've always said that contract is misused in many ways, that its real accuracy is when you get close to the meetings. Otherwise, it's an indication like any market. If somebody asks me where interest rates are, I say 4.29, and they come back a week later and say, okay, I want to buy those 4.29s. Well, that was a week ago. Things change. But the point here is when you get close to a meeting, if the percentages are rather solid, the Fed will deliver. If the percentages are close to 50 or under, they won't. They don't like to disappoint. So we need to monitor this, especially when we get about a week out from that September meeting, which occurs on Tuesday and Wednesday. Of course, the Wednesday, September 17th.
Order submitted.
Squawk Box Gang, back to you.
What's the number we need to watch most closely to see if it's around
Order
what?
canceled. Order submitted.
Because now it's not 4.29s anymore.
Order filled.
In terms of interest rates, I would say that the reason I was giving that analogy is that markets are always on the move, and any quote's only as good as the air of your breath when you say it. But hovering here at 430, you know, what I would say about the technicals of this, it's easy. Use 434 to 437 is your comeback home base for 10-year yields. And that seems to work. Your wide range is 420 to 440. And I see a bias to the upside in the long end. If for no other reason, monitor the 30 minus 10 spread. It's known as the knob. It's at historic highs. Well, it's at a 4-year wide. And the wider the distance between some of those maturities get, especially on the long-dated treasuries, Becky, that usually implies that the premiums are going to stay wide, which keeps the long-end rates high.
Okay, 60 base. Okay, we'll watch this very closely. I'm going to keep that in mind, and I learned something today. Rick, thank you. Learned about the knob.
Thank you.
Steve Leisman joins us right now. He's got more on this. What are your thoughts, Steve?
Well, I want to bring in a completely different idea to what Rick was talking about, which is when you bet the horses, one of the things that they say is never bet on a horse whose odds are rising. In other words, their chance of winning is declining. And so, yeah, I'm looking at this September contract, which Rick is right, about a week ago, not maybe even less than a week ago, was trading at 100% probability. Now it's 20% for a hold. So those odds are declining for this cut, though I will caution that tomorrow we'll know a lot more when we hear Fed Chair Powell talk, if he does indeed address the economy and the outlook and policy and whether or not he gives a go-ahead. Schmidt this morning, as you know, we had him on our air talking about the idea that he's more concerned about this 3% inflation rate and the Fed having more work to do, doesn't see restrictiveness in the economy. Raphael Bostic is out this morning talking about his continued support for one rate cut. And one other point, which is very interesting that I think we're going to talk about here, which this is a conference about the labor market. Bostic saying that because of changes to the labor market, including what's happening with immigration and deportation, the new replacement rate might be between 50 and 70,000. What does that mean? It means in order to keep the unemployment rate steady, you need to add 50 to 70,000 jobs a month. Well, here's some evidence of that. We just had that big revision downward, Becky, in jobs to 35,000 a month over the past 3 months, and the unemployment rate rose just a tick. So we maybe have a lower run rate here for employment because of what's happening on the immigration side. Becky?
That's a really interesting point. Steve, on the 80 versus 20, 80% chance for a Fed rate cut of 25 basis points in September, I mean, that's still well above 50. Steve said above 50. You know, the Fed doesn't like to disappoint or surprise the markets. So you're right. We could see a big change based on what Jay Powell has to say tomorrow. But it still looks like it's heavily favoring that cut. And the Fed, I guess, will take some of that into consideration, too.
Yeah,
I guess you got a job on it if it's not where you want it.
I have a weird way of thinking about this, and maybe you guys can add into this. Imagine you're Powell, and you have to step to the plate and say, okay, inflation is running 3% or a percentage point or half a point above my target. The estimates and the forecasts are that inflation will continue to rise to be above my target. But hey, I'm cutting interest rates. Something doesn't jibe there, and it seems like a very weird case to make. He would have to say, I'm really nervous about the job market, that you have this decline in job growth.
Well, that's why the odds have gone up based on the revisions in the jobs markets and the jobs numbers. So
right. But we're giving up the fight against bringing inflation back down the target. It's sort of an admission of defeat on that, what we've been talking about here on Squawk, which is the difficulty of the last mile. We're done with it, which is almost like saying, I'm raising my inflation target to 3%.
Yep. Hey, 1 to 3.
That's what we heard yesterday.
Yeah,
right?
and we call it, and then we call it government work, and it really is. It's government work. 1 to 3. What is government work? Right?
It's like when we tune our guitars, Joe, and we say that's close enough for rock and roll.
Oh no! That
and
you
it's not
got
quite
to
in
get
tune.
that exactly right. You know that if you got a bag, if it's out of tune, it ruins everything. Obviously, you know that.
Unless everybody's drinking or doing something else.
Yeah, exactly. Yeah.
Steve, thank you. We appreciate it. We'll talk to you soon.
See you soon.
Joining us right now is Priya Misra. She is fixed income portfolio manager at JP Morgan Asset Management. And Priya, let's weigh through everything you just heard from these two, what you saw with the numbers. What does Jay Powell say tomorrow? How does he tee all of this up?
So I think the Fed, as well as Jay Powell, they have a really tough job ahead because the dual mandate is intention, right? There's inflation's not at their target, and there's inflationary pressures with tariff. Even service inflation's higher than where it should be. So you've got that inflation conflict or above target, and you've got the job market, which, you know, I know that the claims did pick up, but overall we think we're in a low hire, low fire economy. There's big questions. How much of this is cyclical versus structural? We don't know actually how weak the labor market is. So if I were Jay Powell, I don't commit to anything because there's another payroll report, there's another CPI report before that September meeting, and sort of leave it to the data. Let the market reprice based on the data rather than the Fed's reaction.
That's an excellent point that we have another data point. We are used to getting this Jackson Hole readout from the Fed to say, what are we really teeing up for the next 6 months to a year? It may be a time to step back, but if he does that, if he doesn't jawbone and talk the market's expectations down, you're going to see a much bigger reaction in the markets if they get surprised by no rate cut come September.
I don't think he'll take it off the table either. I mean, the one thing where he can maintain the easing bias is to talk about the fact that interest rates are restrictive. And I think the majority of the Fed believes that somewhere in the 3% would be neutral. We're running at 4.5. So this idea that the easing bias remains when they feel better about inflation and inflation expectations, wages, all of that allows them to cut, they'll cut. I think if they keep it in the horizon, you may not get as much of a reaction. And I think he's going to say, well, if the data requires it, we'll cut. I think that can keep the hope alive. There may be some disappointment tomorrow, though.
I know, Priya, that you're a fixed income manager, so you're looking at the bonds market's reaction to all of these things. But I know you have to be thinking broadly about what's happening with the economy, too. The big question that keeps coming back is the consumer slowing down? Is there potential for an economic slowdown or even a recession on the line? What do you think? That has to be the basis for any other decision you're making.
Great question. And the data has been volatile, right? You have that one labor report which moved the market as much. So we take a step back. Let's look at the trend. The trend over the last 6 months is things are slowing down. The consumer is slowing. We look at, whether you look at real consumer spending or you look at PDFP, that's our favorite measure, it's the private domestic sales. You take out inventory, take out government, take out net exports. It's slowing.
That is a good number.
Right. But it is slowing. It's not falling off a cliff. So what we're calling this, is this a soft, if I was an equity person, I call it a soft landing. Bond people call it sub-trend growth. What is that? 1.5% GDP that can allow the Fed to cut a little bit, maybe, get to neutral, and not a whole lot more. We don't need accommodation. That's how we see the economy slow down. I mean, but I will say we came into this year with very strong consumer balance sheets and corporate balance sheets. And it's been impressive that earnings have generally held up. The one caution would be prices have not gone up that much. And so as tariffs have to be paid, so far the companies have taken it. Do they start to pass it on? That will be the real test. Can consumers continue to spend as prices go up? And we think there may be some slowing there, which will allow the Fed to cut.
Priya, thank you.
Thanks.
Order filled.
Right, still
Order
to come.
submitted.
Making drug manufacturing great again, it says here. A new plant set to open in North Carolina. Live report next. We're coming right back.
Down, up, right, left, inside, out. Sometimes it's hard to make sense from nonsense. Go beyond the headlines. A trusted global perspective. The Economist. Know which way is up.
I like things personalized, like my coffee. So when my doctor prescribed Vyvgart Hytrulo self-injection for my generalized myasthenia gravis, we personalized my treatment goals.
Vyvgart Hytrulo can improve
Order
daily abilities
filled.
and reduce muscle weakness.
It's my treatment, my way.
Vyvgart Hytrulo for weekend away ski.
Order submitted.
It's travel ready and can go where I go.
Self-injection fits my plans. Do not use Vyvgart Hytrulo if you're allergic to its ingredients. It may increase infection risk and cause serious allergic or infusion or injection-related reactions. Tell your doctor if you have an infection, fever, recent or planned vaccinations, allergy history, or kidney problems. Most common side effects include respiratory and urinary tract infections, headache, and injection site reactions.
My Vyvgart Hytrulo self-injection.
Reducing my symptoms.
That's treatment my way.
Ask your neurologist about Vyvgart Hytrulo.
Breaking earnings news. Target, Lowe's, Walmart, Ross. Market reaction. Expert analysis. Strategies for your portfolio. This week on CNBC and streaming on CNBC Plus.
If you know luxury, it's not just award-winning, it's rewarding. Sattva Mattresses supports all types of sleepers. Luxury is handcrafted and assembled in American factories and brought directly to you with our complimentary in-home delivery and setup service. Which is why over 90% of customers would recommend Sattva to friends and family. Sattva, luxury mattresses made affordable.
Order filled.
Get a large two-topping Crazy Crust pizza for
Order
$6.99
submitted.
from Little Caesars. Look at that buttery flavored garlic spread sprinkled with Parmesan. Try Crazy Crust for $6.99 for a limited time.
Pizza,
Order submitted.
But wait! I need to
Order
mention how
canceled.
there's
Order
over a dozen
filled. Order
toppings to
submitted.
choose from.
Pizza.
But wait,
Order
I want to
submitted.
reiterate how
Order
legit
filled.
this
Order
Crazy
filled.
Crust
Order
is.
filled.
Order
It's
submitted.
good. Little Caesars is the real deal.
Pizza.
Order
But wait,
filled.
Order
5 years,
filled.
Order filled.
$3 billion later, a new drug manufacturing
Order
plant
filled.
is about to open in North Carolina. And it may have come at a most opportune
Order
time.
sub- order
That
filled.
Order filled.
This year's best state to do business? Was it North Carolina?
I wasn't here.
That was a week ago.
I wasn't here the week it was
Angelica,
announced.
I think it was. Angelica Peoples joins us now with more. Good morning.
It was the week of July 8th.
It was.
Hey, Joe, well, it is North Carolina. That was our top state, and this has been a big boom for U.S. manufacturing. So these tanks are ready for the fall opening of Fujifilm Biotechnologies' new factory.
Order
And it
submitted.
will be one of the largest biologics manufacturing facilities
Order
in the U.S.
filled.
Order
So
filled.
we're looking at what's called a bioreactor. Each one of these spans 3 floors,
Order
and it can
submitted.
hold 20,000 liters. They're used to grow the cells that will produce monoclonal antibodies. And as you can probably tell, precision here is extremely important. So opening one valve at the wrong time and letting in just one molecule can cost you the entire batch. And historically, the U.S. hasn't been a large producer of biologics. Almost half of branded injectable drugs originate in Europe versus just 17% in the U.S. And that's why it's today's announcement that pharmaceuticals from the EU will only face a 15% tariff, not those higher rates that President Trump has floated. is important for the industry. But things are starting to change, especially in places here like North Carolina. So Johnson & Johnson is one of the first companies that will use this space and one of the many announcing new investments across the country. J&J CFO Joe Wolk credits a lower corporate tax rate for encouraging more U.S. manufacturing.
If you think about the tax policy that's now in place in the United States at a 21% tax rate, that puts us right in the middle of the pack. So we can tap into not only the infrastructure that exists in the U.S., one that's quite frankly emerged since the 2017 Tax Act passage, where we used to have about 1,100 facilities for the manufactured biopharmaceuticals. Today we've got 1,600.
But, Joe, it's going to take time to see the results of those investments. It's taken 5 years to take this site from an idea to reality and getting it ready to start actually making medicines. And that's pretty fast. So much more to come in this space, guys.
Angelica, thank you, and thanks for confirming. It's sad. I know. It was like a week ago, and I'm...
Oh, don't be so hard on yourself. It was a month ago.
It was a month ago. It was a month. It was North Carolina.
Order filled.
Order filled. To come, a recap of this week's big retail reports. We're going to be right back with that.
Order submitted.
At AT&T Business, we confidently guarantee our network. What we can't guarantee, enough hours in the workday. Or your projects always going as planned.
3 days, max.
Order filled.
Order filled. More like 3 weeks. Hey. And closing up shop on time?
Still open? Sure. Yes. They're open.
Not tonight. But with AT&T Business, you can get the connectivity you depend on, or we'll make it right.
To have gold coins in my possession, that hard asset is insurance, you might say, against the paper dollar. It's not for my insurance, but it's for my daughter's and the grandchildren's insurance. Whereas keeping a lot of cash in your bank account can really almost end up being nothing. You have to keep cash, but you don't have to keep everything in cash, and you don't have to put everything in the stock market, and you don't have to put it all in a bond market. You do a little bit of everything. In fact, I sleep better with gold than I do with the stock market because it's tangible. It's there.
If you've bought gold in the past or would like to learn more about why physical gold should be an important part of your portfolio, pick up the phone and call to receive the complete guide to buying gold, which will provide you with important, never-seen-before facts you should know about making gold, silver, and platinum purchases.
Call now to also receive our new 2025 Global Gold Forecast Special Report. Inside, you'll find the real issues on why you need to start owning gold today.
Order
you can also
submitted.
receive a copy
Order
of our
filled.
new
Order filled.
Protection
Order
in the Risk
submitted.
Zone. U.S. Money Reserve can walk you through the 3 simple steps of transferring your existing 401k
Order
or
canceled.
IRA into a precious metals IRA backed by physical gold to further protect your assets from market instability. Pick up the phone and call U.S. Money Reserve, America's gold authority, right now to get your free gold kit and IRA information, including the 3 simple steps for transferring your existing 401k, 403b, and traditional IRA. With more than 2 decades in business, over $3 billion in transactions, and more than 1 million clients worldwide, U.S. Money Reserve is one of the most dependable gold distributors in America.
A CNBC exclusive interview. David Faber talks to Bob Iger and Jimmy Pitaro on the launch of ESPN's new direct-to-consumer service and the state of media today. Squawk on the Street, today 10 Eastern, and streaming on CNBC+.
Hi, I'm Josh Brown, CEO of Ritholtz Wealth Management and the newest contributor to CNBC Pro. I call it like I see it, and that's what I'm bringing to CNBC Pro subscribers.
Join Pro for exclusive access to Josh Brown's best stocks in the market.
Got some news out of New York as we continue to monitor the mayoral race. Yesterday, a longtime advisor to Mayor Eric Adams was suspended from his re-election campaign. A local online news outlet reported the advisor gave a journalist more than $100 in an envelope that was tucked inside of a potato chip bag. The outlet said it reported the incident to New York City's Department of Investigations.
Here's $100. What's that?
Here was $100. Literally, it was it's a wild story. By the way, while we're talking about this, because we've been talking a lot about the mayor race recently, and you know I care about facts and fairness. We had a conversation with Jonathan Greenblatt from ADL earlier this week, where he made a comment that I just think is worth clarifying on the air, because he had said at one point, and sort of made a point of saying, that Zohran Mamdani had not met with any mainstream Jewish institutions, and that was sort of
he said he hadn't gone to any synagogues.
As we talked about this, and he was effectively trying to criticize Mamdani. The truth is, and I didn't know this in the moment, but he had actually visited a whole number of synagogues, and you can go back and look. He attended Shabbat services in Park Slope. He met with the UJA Federation. He met with a number of temples in the spring. Now, Jonathan Greenblatt, who I actually went back and forth with about this afterwards, suggested that what he meant to say was that Zohran Mamdani has not met with Jewish organizations after the primary. So he's putting a sort of a time element on that.
He did not put a time element on it.
He did not make a time element when he said it on the air.
Yeah.
I don't know about the extent of all of this, and by the way, I would welcome Zohran Mamdani to come on this air. We've asked him to come on before. I think we have some really important discussions to have about the city, about capitalism and socialism and the economics of the city and what it takes to make all this work. But I do think it's worth pointing out, given that we did have that conversation on our air. We got a lot more coming up on Squawk Box in just a moment. Don't go anywhere. We'll come right back.
What does it mean to be rich? It's first steps, and sometimes the last word. Rich is living life your way and having someone who can help you get there. The key to being rich is knowing what counts. Edward Jones.
Order filled.
Decking and railing that's ready for anything you throw at it. Even John's 40.
Order filled.
Order filled.
Order submitted.
Performance engineered for your life outdoors.
When you're actively trading, the fees really start to add up. Public is the only platform that offers rebates on your option trades, which help offset those costs. It's a simple way to help me keep more of what I earn.
Comcast Business Advanced Networking and Security Solutions help turn businesses into logistics mastering, supply chain transforming, seamlessly restocking, frictionless paying, poke bowl ordering, cyber securing,
order canceled,
order filled,
access granting,
order filled,
data managing. Welcome to the worlding modern businesses. Powering the engine of modern business, Comcast Business.
Every day, I'm checking the markets
order
throughout the
submitted,
trading session, working the phones, talking to sources to share insights, information, and all of the details that you need to make money.
Closing bell overtime for Easter and streaming on CNBC Plus.
To throw the best tailgates in Texas, you need the highest quality beef and HEB certified meat cutters like me.
And me. We hand cut and grind fresh beef 7 days a week.
High quality beef and custom cuts. No one does tailgating like HEB.
Get a large 2-topping Crazy Crust pizza for $6.99 from Little Caesars. Look at that buttery flavored garlic spread sprinkled with Parmesan. Try Crazy Crust for $6.99 for a limited time.
Pizza, pizza.
But wait! I need to mention how there's over a dozen toppings to choose from.
Pizza, pizza.
But wait, I want to reiterate how legit this Crazy Crust is. It's good. Little Caesars is the real deal.
Pizza, pizza.
But wait! Gotcha!
From Rose Bowl festivities to Major League ballparks, ESPN Experiences takes you behind the scenes and inside the action. Next stop, the Travelers Championship. Your all-access pass starts here.
Walmart reported earnings 68 cents a share. First earnings miss since May of 2022. Revenue is above expectations, though, at $177.4 billion in the quarter, which is above 176.
Order filled.
Order filled.
And major big box stores
order
like Home
submitted.
Depot, Lowe's, and Targets have all reported this week. Joining us for a retail recap, Michael Zakur, founder of 5 new digital Michael, the stock, Walmart's down, as you can see. Right there, it's had a great run, and you compare it to Target over the years, it's a multiple of what Target has delivered or failed to deliver. Actually, was there were these numbers troubling to you from Walmart today, or stock's been doing
not at all, Joe. In fact, these numbers are just fine. Walmart is growing. They're probably going to add $130 to $140 billion in revenue over the next couple of years. Walmart is winning on the back of value consumers. And value consumers
order submitted. Order filled.
Chain down to the bottom.
Order filled.
People love what Walmart's offering in terms of service, technology.
Order
they built
submitted.
the ecosystem that Target hasn't. And that's really the big difference. Walmart is everywhere now.
Will the new guy at Target be able to replicate what Walmart's? I guess I'm asking you indirectly. That stock was down a lot yesterday. Did you have the same feeling that they needed to go outside the company?
Well, yeah. I mean, listen, I'm not going to question Walmart's board or leadership at this point. We do want to give them a chance. Where Walmart has fallen behind, where Target has fallen behind. Is, they're just not investing in the technology, the ecosystem, and omni-channel. They're just not value-oriented enough, and the selection is weak.
How about Home Depot and Lowe's?
Yeah, so there's some really good news, I think, for the economy.
Order filled.
Order filled. Both done very well.
Order
Obviously,
submitted.
they're not focusing as much on the big projects now, but we're starting to see the consumer invest in small projects around the house. And so, with Lowe's going
Order
filled on the pros, Home Depot picking up more pros.
Order submitted.
They're just offering more to consumers. And the consumers walk into a Home Depot and Lowe's, and they're not just thinking about projects. They're thinking about, everyday items for value as well.
Do you think about tariffs, Michael? And with what Walmart said today, is it everybody's different, obviously, but how are they trying to navigate through these right now, in your view?
Yeah, so with retailers, right, there's people saying, look, everybody's in the same boat with tariffs. But they're not. Some people are, on a Royal Caribbean cruise ship, and others are in a dinghy, depending on the size of the retailer. So the ability to absorb uncertainty and to absorb the higher costs, certainly the big guys are extending their lead in this space. But yeah, it's simply the uncertainty around tariffs that, there's still a lot of wait and see in the retail industry. And that's happening at the same time that the entire retail industry is undergoing dramatic changes in terms of technology, in terms of what is a retailer, what's the difference between a retailer, a wholesaler, an online company. And so the companies who are building these massive ecosystems like Walmart and like Amazon, they're going to weather this storm, the tariff storm, a lot better than somebody who's smaller.
All right, Michael, thanks. I don't want to go on any cruise ship. I mean, people disappear. You're sitting there in your stateroom, you look over.
The cruise, there's a movie about the poop cruise.
And the poop, and the water, and everything else. It's like, no thanks.
Check it out. It was actually
can't use that anymore, Michael. Anyway, thank you.
We got to go, folks. What a show it has been. Take a quick look at the futures right now before we hand it over to our friends on Squawk on the Street. You're looking at a bit of some red on the screen. We're going to hand it over now. Squawk on the Street begins right now.
Good Thursday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with David Faber, Sarah Eisen at Post 9 of the New York Stock Exchange. Kramer has the morning off. S&P's eyeing a fifth consecutive day lower, something we've not seen since January. As Jackson Hole kicks off, September rate cut odds actually decline a little bit. Walmart says its own tariff-related costs are rising with each passing week. We'll get to all of it. Our roadmap begins with Walmart. Shares under pressure after saying tariff costs continue to jump, but the retail giant is raising its outlook.
Plus, the U.S. and the European Union revealing new details about their trade deal, including tariffs on pharma and semiconductors.
And Disney's new ESPN flagship streaming service launches today. What is at stake for the company, for its investors? I'm going to have an exclusive with the CEO of Disney, Bob Iger, and the chairman of ESPN, Jimmy Pitaro. That'll be in the next hour.
Let's begin with market reaction to Walmart's results and guidance. Comps here pretty steady and solid in the fours. 4.6 is a beat. They raised their guidance for the year. Some of the commentary coming out of the call, and I know you spoke to the company, does sort of pivot around their own costs and how they expect it to be increasing in Q3, Q4.
I mean, if you strip out a lot of one-offs, which is why you got the earnings miss, they had, increased insurance costs around labor and stuff like that. Then it's very
Order
filled. And actually, if you strip out all the one-offs, it's operating profit that's growing faster than sales, and the underlying sales trend is actually quite good. 4.6% U.S.
Order
comps.
filled.
I mean, yes, they had a high bar, 1.5% transaction growth, ticket growth 3.1%, and here I thought was the highlight, e-commerce growth, up 26%. The prior quarter was 21%, so an acceleration there, in part because advertising is really rising steadily. That was like a 50% gain. But I did talk to the CFO, John David Rainey, and what we talked about was the strength they're seeing. They continue to gain share, he told me, with high-income consumers. They don't call it trading down, but clearly they're expanding their customer base there. We talked about the e-commerce growth quite a bit. He said we expanded our offerings there, doubled profitability in e-commerce. A third of online transactions that they're seeing, customers are paying more for expedited service. So they're really trying to work on their service features. And he said by the end of the year, we'll serve 95% of America in under 3 hours. That was a new stat. Just in terms of just how fast they've been able to move when it comes to supply chain and logistics and delivery. On the consumer, what we talked about, the gaining share. Also, he said there's been an uptick in apparel and fashion demand. General merchandise growth with low single digits. That's actually an improvement, Carl. He said the consumer's relatively consistent and resilient, and that speaks to the fact that you can't see wallets that pressured when they're seeing the kind of growth they're seeing in general merchandise.
Sarah, stocks had a very good year, up 36% over the last 12 months. That said, it looks like it's going to open down. I'm curious as to why.
I mean, look, the bar was pretty high, I think, going in because the stocks had such a good year, and there are all sorts of whisper numbers. I think buy side was looking for a high comp, and that's what was delivered. It was overall a miss, but again, like I pointed to one-off factors like costs when it comes to that. On tariffs, I mean, clearly they feel it. I mean, what we talked about with the CFO, overall, their inflation is 1% year over year. So we know that that's not terrible, right? Because the Fed wants 2%, and right now we're around 3%. That's the, Walmart trying to do everyday low prices, but it is an increase from 0.5%, which is where it was the last quarter. There are areas, he said, where they've had to raise prices, and then there's areas where they mitigated it completely and absorbed it. So that's going to ultimately hurt margins. But they did, keep the operating profitability forecast intact. So they feel good about the momentum in the business, even with these added costs of tariffs, which are reality now.
And it is in contrast to certainly to Target, of course, which we heard from yesterday. You covered that closely. And even to Lowe's and Home Depot, obviously different customer base to a certain extent, but not, Carl, reporting the same comp store sales increases that Walmart is.
No, I mean, a 4 is, that's a TJ Maxx.
Right. Then there's TJ Maxx, which is in a world of its own. Yes.
I know.
But gross margins in the U.S. up almost 30 basis points suggest that they are not eating these margin pressures right now.
Not completely. I mean, they have something that nobody else has, which is giant scale, right? And ability to mitigate this really probably better than any other retailer because they have that scale. So when you look at a category like patio furniture, which is really susceptible to tariffs, 30% tariff rate now, according to the CFO, on a category like that. But you can't necessarily pass on that price because people won't pay 30% more for patio furniture in this environment. So they're able to absorb that and eat that just better than everyone else and not have it reflect, downward pressure too much on margin.
And it is worth pointing out that the multiple has expanded over these last few years to an extent that you did not see with Walmart for quite a long period of time. I mean, the company's been public, close to 50 years. But, it did not always trade at these kinds of multiples. We're talking 40 times, something along those lines, right? High 30s, I think.
Yeah, forward 1-year PE 39.
Yeah, so that also leaves less room for error. Yeah.
Exactly. I think expectations were high. I'm not sure, if you go through some of the early analyst notes that this does anything to alter the bull case on Walmart. There's clearly momentum in the business, and they're gaining share in a number of categories. The fact that they're calling out apparel and general merchandise, which has been a little bit weaker and is tariffed, I think speaks to overall strength in the U.S. consumer, which is consistent. I mean, even with
Order
the
filled.
market, there was no like blaming on a weak U.S. consumer kind of issue. A little bit that the consumer is more choiceful, the consumer wants value, but we're not hearing about a consumer that's very pressured.
They did have a line in there that the pressures, to the extent they do exist and will increase, are hitting the low and middle income cohorts. And
That's
by the way,
consistent.
just for optics here, I mean, Amazon, Costco, Kroger, Albertsons, Depot, Target, Lowe's, they're all going to open lower today.
And Cody too, not so hot on the fragrance business, which we'll talk about in a moment. But look,
I always like to remind people, by the way, the Walton family controls at least 45% of Walmart still. They've come down from 50 or close to it, but it's always interesting to note that they still have almost majority control.
they've had a good year.
Not bad, not bad. Not to mention, the dividend checks keep coming in too.
I was just going to say.
Yep, not bad.
Right.
I was just going to bring this up all in the context of jobless claims, which we also got this morning. We saw a rise, 11,000 more workers filing for unemployment claims than the previous week, 235,000. That was above expectations. It's the highest level since June, although if you smooth it out, you look at the 4-week moving average, it comes up a little to 226. It's not unhealthy in terms of the amount of layoffs. Continuing claims, though, show that people still have a hard time finding work. They're out of work for a long time. 1.972 is actually a cycle high, most since November 2021. So maybe not so much in the firing business, but also maybe not so much in the hiring business as well. The Fed would be right to worry about the cracks in the labor market.
Yeah, no hire, no fire. That's the line lately. Meantime, as Sarah said earlier, the U.S. and the EU revealing some fresh details about their trade framework. Our Eamon Javers has been watching.
Order filled. Order submitted.
Statement also codifies that the EU intends to procure U.S. liquefied natural gas, oil, and nuclear energy products with an expected value of $750 billion through 2028, and it intends to purchase at least $40 billion worth of U.S. AI chips for its computing centers. Now, on another key note on pharmaceuticals from the EU, the agreement states that the tariff will not exceed 15%. Now, that's something that investors will be watching, as Trump has told CNBC that rates on imported pharma products could eventually be as high as 250%. So this would be much less than that. So a win for the European side on that point, guys. Back over to you.
Eamon, when we first got word of the deal, there was this notion that EU firms would invest some $600 billion in U.S. sectors by 2028. Any language this morning as to how the EU would sort of enforce that investment from the private sector over there?
Yeah, there is language in this statement around that, and it's sort of broadly put. It says in the context of the trade relationship between the two countries, they do billions of dollars, and EU firms are expected to make those purchases up to $600 billion. You know, a senior administration official talking to reporters last night said, you know, what the U.S. side is going to do is just monitor that and make sure that that happens. But the language there, you know, in the statement, you can look at it yourself, maybe a little bit squishy in terms of just this expectation that those purchases will happen. U.S. officials have said that they're not that worried about it, given the size of the trade relationship between the two economies. You know, that amount of purchases is expected to happen, you know, sort of in due course.
So that's what, I mean, like Siemens here, for example, just spending a lot of money to build a new plant or something along those lines would count.
Order filled.
Order filled. fits in?
We don't know. There's some language in there
Order
around
canceled.
guiding toward specific
Order
sectors.
submitted.
A senior administration official ticked off a couple of the sectors on a call last night. But yeah, I mean, these are individual companies inside the EU. That's not a state-run economy, as an official put it last night. So the EU can't direct companies to spend money. So the EU can't really force this to happen. All the U.S. can do is monitor it and, keep their fingers crossed. And if there's any significant problem, they said they'll revisit it with the EU side.
So on pharma, I mean, this was a very close watch one because a lot of generic drugs are made in Ireland. A lot of drugs are shipped from Europe to the United States. 15% is maximum tariff. I guess in Ireland they're welcoming the clarity and saying, I guess it could have been worse, but that's still an elevated tariff rate for drugs coming in here.
It's absolutely an elevated tariff rate beyond what we had, say last year. But I think, if you're the Europeans, you look at this and you say, well, it could have been a lot worse. And that is, President Trump's negotiating style. He puts these threats out there that are enormous and sort of terrifying for people and really rattles the cage. And that gets the attention of the trading partner. And then, they feel a little bit relieved when they get down to only 15%. But if you had said 2-3 years ago there were going to be 15% tariffs, that would have been horrifying to people on the merits.
Eamon, thank you.
You bet.
Eamon Jabbers outside the White House. Coming up, we'll have details about Disney's new ESPN direct-to-consumer streaming service. If you haven't heard, it's making its debut today. In the next hour, we will speak exclusively with Disney CEO Bob Iger, ESPN Chairman Jimmy Pitaro, and we have a lot more Squawk on the Street straight ahead.
Sarah Benzino, Brandon Coley, Jablonski Auto Body, LLC.
What'd she call Harper?
Oh, you mean Jablonski Auto Body LLC.
We actually sold the Twins naming rights.
Like stadiums do. Kids are so expensive these days. Here he comes.
Oasis Breeze Tan and Spa.
If you need a tan, I'm your man. Could do business with you.
Or we can look at some investment options for you.
Works for us.
The right money moves aren't as absurd as you think.
Sir, it seems that the Gladiator is getting a lot of positive social sentiment.
Innovation changes everything. With one investment, you can access the NASDAQ 100 innovators who are rethinking the world. Before investing carefully, read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at Invesco.com.
You founded your kayak company because you love the ocean, not spreadsheets. You need to hire.
I need Indeed.
Indeed you do. When you sponsor a job on Indeed, candidates can find it easier, so you can hire easier. Visit Indeed.com/hire.
When emergency strikes, first responders rely on the latest technology. That's why T-Mobile created T-Priority, built for the 5G era. Only T-Priority dynamically dedicates more capacity for first responders.
Never miss a moment.
U.S. businesses have borne most of the tariff costs so far because it takes time to negotiate lower import prices or to pass price increases along to consumers.
I think they will ultimately cut in September. The only thing that could derail it is if you got a surprise in the job report early September. I don't expect that.
One of the reasons why it's a great investment environment, there's a lot of news flow that allows you to take advantage of opportunities.
Today, let's paint with Behr, America's most trusted paint brand.
Wait, we don't have Behr.
Do we need that?
Well, this year's a paint and primer?
It just says ain't.
You bought 8.
Well, with Behr, you can paint a whole room for under $100. How much did you spend?
Like a lot more.
Oh.
I thought you said you researched this.
Aren't all paints the same?
No, they're not. Don't overpay for your next project. Get Behr quality at an everyday low price. Only at the Home Depot.
Order submitted.
Right? And only $250 a night for my favorite site. What?
Order canceled. Order
Got
submitted.
mine for $155. You have to check Trivago.
Oh yeah? Prove it.
On Trivago, you can compare hotel prices from multiple different sites. Even your favorite one. Look, same hotel, $100 less. You didn't check Trivago?
I didn't check Trivago.
Check Trivago to compare prices and save up to 40%. Hotel? Trivago.
All right, ESPN's direct-to-consumer service is here. It's funny, it's 10 years. Carl, you may remember this. 10 years ago, that August, that ESPN day, so to speak, where for the first time on a conference call, Disney talked about, well, maybe we're starting to see some subscription declines or at least erosion as a result of cord cutting. And we spent a lot of time on it, the three of us. Not you, actually. It was Jim, but I'm sure you're around somewhere. You were in my head, of course.
It's a guy's thing, I guess, to talk about ESPN.
And here we are 10 years later, because, frankly, it wasn't soon after that the idea, at least, of, well, at what point will there be a direct-to-consumer service that will be out there? It took quite some time. Disney would tell you, obviously, it's the right time. $29.99, $30 a month. You're talking 35, almost, it depends whose measurement it is, 35% of all sports available, maybe a bit more in terms of sports hours that will be available. You can bundle in Fox as well for $40. You see it right there. But it is a new era. Jimmy Pitaro is saying to employees it's a defining moment for how sports are experienced in the digital age. But still key questions, and many of which we will, of course, entertain with both Mr. Iger and Mr. Pitaro in terms of sports rights, which only keep going up, and whether it's big enough, and whether they have the scale, and what about international, and, well, on and on from there, frankly.
Yeah, a lot of discussion this morning about multiple entry points into this whole universe, right, of direct on ESPN, all the integrations, and how confusing that might be for some consumers, how they're going to educate people how to get into this stuff.
Yes, and I mean, again, and the price points, if you want to watch or have access to most, if not all, NFL games, if you're a big fan, and there are many out there, it's kind of the very streaming services where they have at least one or two exclusive games, you're talking about almost spending $1,000. Now, you can turn on and off and probably reduce that a bit, but the numbers keep going up. And then, of course, we'll come back to the big question, which is, okay, this is out there. It will garner some subscribers, certainly. Will it contribute to an increase in erosion of the cable bundle, which, of course, is down dramatically, something we've been talking about here.
Good morning.
But there has been sort of a hope that cord cutting would slow. It hasn't really happened. And there may be a belief that this will only accelerate.
Yeah, it's $29.99 a month, but then you can also bundle it with Hulu.
Hey, I'm the Sam Bugatti. I kind of want a long ride at Open, see if we get a pump, because everything's oversold. Yeah. Well, not 200. Let me see. 138. Yeah. I'll average down.
Since for the first time in, 50 years almost, we won't have a Nielsen number to attach to it.
I know, and it's not clear that we're going to have a sub.
If we lose 23,000, that's not going to be good. Yeah.
Success or
that's a good question. I'm going to ask that one as well. But yeah, how do you measure it? Obviously, a long time coming here. Their claim would be, listen, we are all sports for people who care about sports. We're there for them. And that's what it is. Venue, remember that failed effort to bring together ESPN, Fox, and Warner Brothers Discovery's various sports properties. Obviously never made it to the finish line. Had a little bit more content. And there were still some questions as to whether it would be enough.
So because my kids are sports fans, we're going to have this.
Yes.
We have to have Amazon and Apple.
See, bought shorted 4 a.m. at 298, so it's up decent. I got out this long.
Forget Peacock. Peacock's okay. Order submitted. I'm taking the other tack.
But everybody's betting on live.
Nobody has Peacock.
Right. Well, that's not true. We have Peacock.
Kidding.
We do.
I'm going to watch my Inside Track documentary on F1.
Oh, the one you did?
Yes. It's on Peacock.
Well, maybe after we converse it, it can become on.
Actually, I'm going to stay flat. I don't want to do anything before Open because our data coming out.
See as well. Take a look at the pre-market. Bunch of movements to get to. There's some on CoreWeave. We'll get to Meta. Check our Palantir. J&J. Dayforce is done.
Yeah.
As we mentioned earlier. Squawk on the Streets back in a minute.
I don't want to be stupid and do something dumb. Yeah, it is 9:45.
ETFs apart so they can make a difference at the core of the portfolio. Because we don't fit molds. We prefer to cast originals. Capital Group. Actively different. Active ETFs.
In the age of AI, smarter threats needed smarter protection. CrowdStrike Charlotte AI is delivering the future of cybersecurity for what's now and what's next. Built on the
Good morning, Sniper.
Charlotte AI gets
I want a bot to go long. I might go long later because 15 minutes looks like it's curving back up soon. 3 minutes got the upside. Yeah. I think after today, I think Tradify is gonna have the sell for the growth. I think that's will be the last one.
Guaranteed a 1932 dated gold coin featuring with an Indian war headdress and a majestic eagle. With limited availability, you must call now. These 1932 dated gold coins are still in uncirculated condition with brilliant luster. That is 92 years of history you can hold in your hand. Call 1-888-870-6353. Call now when you receive a free bonus over a $55 value free with every order. Call 1-888-870-6353 to secure your 1932 $10 gold Indian coins before they sell out. Don't wait. You must act fast. Call now.
At PGIM, our ETFs use today's best ideas to help bring tomorrow's goals within reach. Our broad suite of over 50 low-cost ETFs is backed by 150 years of active management expertise. Explore PGIM ETFs today.
A CNBC exclusive interview.
Dang, I left my long. I had a long at 35, got out at 38. Yeah, got out way too early. 6 minutes.
Some NDX laggards this morning, Gilead to the top, but still a little semiconductor weakness at XP, ASML in there as well. Chips still 12.8% of the S&P market cap. We'll get the opening bell in a couple of moments. In fact, Jimmy Pitaro, ESPN, Troy Aikman, El Duncan, all going to ring the bell here at the NYSE in a moment. There they are, making their way to the podium. Meantime, don't forget, you can catch us anytime, anywhere. Just listen to and follow the Walk on the Street Opening Bell podcast.
Breaking news. Target, Lowe's, Walmart, Ross. Market reaction. Expert analysis.
Buddy.
Strategies for your portfolio. This week on CNBC and streaming on CNBC Plus.
Morning. We have data coming out 15 minutes after open, so careful.
The key to a truly unforgettable mountain vacation.
Yeah.
There's one place tucked away in the mountains, the expected, where you're sure to find it. At Beaver Creek. Book your getaway today. The Nissan Rogue takes hit after hit.
That sounds good. I love mango. 3 minutes wants to pump. And we have 4 minutes left. I need a little dump so I can long. Yeah, 340 be a good short, Andrew. But it's gonna depend on the data. Got PMI coming out. What's up, Gambit? And you woke up late, man. All my shares are a little red. Nothing green for me. It's chop. I hope Van took his profit last night because it dumped. It was up a lot, but yeah, he's kind of greedy. Is that even good? It looks good. That mango fresher.
Access it anytime I need it. It's very simple. Better rates mean faster growth, and that's exactly what I need.
Yeah, we got PMI at 15 minutes after open game it, so careful. 3 minutes at the upside. I caught that out like 10 minutes ago, but I didn't take it. 15 minutes is towards oversold, so it's trying to bounce, but it needs some time.
Invest like the future is watching.
The opening bell is brought to you by Nuveen. Invest.
Jackson Hole Symposium, talking to our own Steve Leedsman about Fed Governor Lisa Cook. Remember, yesterday President Trump called for her resignation after federal housing regulator Bill Pulte accused her of mortgage fraud. Well, Cook has responded last night saying she won't be bullied into stepping down from her position. In her statement, she said she learned this from the media that Bill Pulte posted on social media he was making a criminal referral based on a mortgage application from 4 years ago before I joined the Fed. No intention of being bullied. She does, though, say that she intends to take any questions about my financial history seriously as a member of the Fed. And so I am gathering the accurate information to answer any legitimate questions and provide.
I know. I called it out too, but you know, don't hold long. Yeah. Yeah. Just hope I have another drop. I don't want to chase this long yet with data coming out. Yeah. You hear that, Gambit? Don't be chasing again. PMI, flash PMI in 15 minutes after open. The unemployment data was trash. Yeah, I blew my ETF. Nope, not a good yellow. Should listen to Van. Dang, it's not pumping at all. It's actually dipping. Yeah. Oh, a good thing I didn't long. Oops. I forgot to cancel that long. I'm out. 30 to 35. Yeah, that was nasty. Oh my god, that's nasty. Cancel all these open orders. Oops. Oh my god, I forgot to cancel this one. Get me out of here. Whew. Wow, that's some movement.
It's not really appropriate to have a discussion about a sustainable.
Well, did you see yesterday's price action?
Nice.
From the dip that we saw.
Yeah, I had a long 214 on accident. That worked out. Wow. It's like yesterday.
Order submitted.
That sparked this rotation out of these mega cap tech names, these AI names. There wasn't really anything that happened. It was just maybe it was high valuations, maybe it was a digestion, maybe it was August. Taking. It's August.
It will. I mean, I know that's funny to say something as simple as that, but as we sort of said coming into the month, August is kind of weird. People do go away, and there's not as much focus right now. Perhaps we also did talk about
Try to
retail.
quick long in a little bit, maybe at 200.
So much of the run-up, whether it be in Palantir or some of these crypto treasury-related names, or some of the SPAC things that we've seen of late, or some of the memification.
Order submitted.
Just general buying also perhaps pull back.
Well, the joke lately is that Americans are done gambling on stocks and they're ready to gamble on NFL, which was the line yesterday. But she did have some fundamental guidance out of AMAT and even Cisco revenue guidance, and then broader on Tapestry and Deere wasn't so hot. That combined with PPI and Meta freezing AI hiring.
Yeah, nothing like AI hiring. Obviously, after spending, I mean, just $14 billion alone to buy 50% of Scale AI to get Alexander Wang over there took in what, $4 billion. I mean, the numbers are astounding for what Meta has already spent to essentially restart its AI ambitions, I think, or a reset. I think it's fair to say. But also though it came out of earnings and nobody said, "Oh, we're pulling back." I mean, everybody in fact or either reaffirmed or raised their capex. So the idea of the
Nice.
in terms of AI spending.
Is that another payout or no on the elite? Oh, okay, gotcha. So you gotta do 10 days now instead of 8. It's okay.
Company, at least on the latest potential round there. Trades about 25 times. OpenAI trades.
That was a nice pump.
Now, that said, OpenAI does not have anywhere near the profitability. It's not even profitable. Obviously, they're going to spend. And we're talking about who knows how much money. But it is interesting to compare even with private companies whose valuations have been soaring, the likes of some of our public companies traded higher valuations.
There was also this paper that gets mentioned. Did you see it at MIT?
Yes.
On which researchers found that 95% of organizations are getting zero return from their investments in generative AI.
10 minutes into data.
That's what's actually because the technology is weak, not because the technology is weak, but because companies are failing to integrate it strategically, govern it responsibly, and scale it effectively.
That 214 long was good. Only took 10 points.
Well, we'll see. They've got a catalyst. They're going to report earnings next week, and that could be a catalyst for the entire group, as we've seen this rotation. I also think the context here, guys, is so important, which is the NDX, Nasdaq 100, ran 45% from the lows in April. So it came up a lot. When you talk about a digestion period, context is key.
Yeah, 5 days down for the triple Qs. We'll see if we get a sixth one today. At least we did get a little bit of a vote of confidence out of CoreWeave, David, on this Jane Street stake. We'll see if that holds some water, given some. We've been watching, obviously, the ownership structure of CoreWeave.
We have, and obviously we've been keeping a close eye on the lockup of those who's going to sell. The stock is actually up this morning, leveling out. Clearly still a great performer off the IPO, but if we're talking about a stock that did hit $187 a share. So, and again, momentum playing such an important role in this market. It's one of those key factors that you hear about, certainly.
Maybe we should just short every pump. Trend is still down.
To your point, the question there then will become, has it weathered the worst of the lockup? And those who wanted to sell, and from here is it going to be a bit safer?
10 minutes. I don't want to take anything yet.
They're going to be dealing with this Core Scientific deal. Not a large deal by any means, but not unimportant for them, because also it does have the effect of eliminating certain liabilities that they have with Core Scientific, and whether they're going to need to increase the ratio, essentially. We still don't have I don't believe we have a shareholder vote set. We don't have the proxy out yet on Core Scientific, but there are significant shareholders opposed to the deal as it's done.
Sorry. We got a little target bump of Dell over at Morgan Stanley.
Single what?
2 days in a row now. Upgrades for HPE. Today it's Morgan Stanley. Yesterday it was Evercore.
Oh, yeah.
Adding to tactical outperform. And then I guess we'll keep our eye on dates too.
Good morning.
Now done. 70 done.
$50 cash.
Just waiting on the market. We have data coming out in 10 minutes.
Toma Bravo, taking day for Steel Ceridian private.
I'm red on all my account. Slightly red. Yeah. Got chopped out early morning. Yeah.
We started to see the emergence of private credit in a significant way in terms of funding so many of these go privates. I remember the Stamps.com deal.
Yeah, bot's still short. I'm just waiting for the bot to go long.
Was a private credit fund. Here, it's only Goldman Sachs. Now, they obviously have a private credit effort at that company, but I don't have details on the financing itself, how large the equity check is, because this is one of the largest LBOs we've seen in a very long time. You're talking roughly 11 billion or so overall in terms of what it's going to cost them to buy those shares at $70.
Oh wow, that pump. Yeah. Let me try to do a quick short. Yeah, almost green. I was down $200 on this pro and I was -9. See, bot shorted at 298. We're almost there. I might go long later. Oh, you guys thumbs up for that Lucid 150K today? Don't forget. It's on the giveaway channel. Rose.
It is an interesting thing to at least start
Rose.
to be aware of, given, as you say,
Is it?
the percentage or preponderance of credit that's been extended to software as a service companies, both private and others. If in fact they do start to really see a diminution of business as a result of the rise of AI, which of course is a thing we've been now talking about for several weeks at least, keeping close eye on Adobe and Salesforce and ServiceNow and any of the other names that have been under some pressure.
We got 5 minutes. Let me cancel all my long just in case. Cancel. Cancel.
Also, I got the minutes from the last Fed meeting room for a little hawkish yesterday. So the basic takeaway, the key takeaway from the minutes, the notes from the July meeting, was that a majority of Fed participants at that time thought that inflation is the bigger risk on the Fed's outlook and on their mandate than weaker jobs. Now, that came 2 days before the weak jobs report that we got for the month of August, and the revisions for June and May, which were sharply lower. So I wonder if they feel that the risks are more balanced. But I think hawkish minutes, looking ahead after some hawkish Fed speak to Fed Chair Powell, who, look, the risk for the Fed, it's tough right now. They have risks on both sides of their mandate. There's definitely higher inflation risks with tariffs, with also not just tariffs, a little bit of a rise in services prices that we've seen lately as well. We want to know, I mean, the key question for them is are tariffs a one-off impact on prices, or is it more persistent? And the answer, nobody knows, but it's going to lie in what happens with services and wages and that sort of stuff, which remains stickier. And that's what we're on the lookout for, and that's what the Fed's on the lookout for. On the other hand, there's risk on the job part of their mandate as well, which would point them toward cutting in September. We saw that in the last jobs report. We see continuing claims elevated now at a cycle high. A little bit of a pickup in jobless claims.
Yep, 4 minutes. I hope we dump hard so I can long.
The market's pretty confident in a September cut. But that'll be a key question for Powell when he speaks. Is he going to talk about balance risks? Is he going to talk about worrying more about inflation? Or is he going to put more emphasis on the jobs? Problem.
Yeah. Meantime, Bullard on the tape this morning saying he's going to meet with us after Labor Day. There's probably room to cut about 100. You hear that a lot from some of the would-be candidates.
Yes. But and I thought actually what David Zerbo said yesterday on Squawk Box was resonated with me and Jeffrey, who's also a contender.
What do you think of his audition, by the way, Sarah?
Look, he made
it felt as though he truly was auditioning.
They all are auditioning for the job.
Yeah.
I mean, it's not just him. I think that, but he made a good case that you have to make the case now that rates are restrictive, and therefore you should cut. Even if there's a little bit of inflation risk to the outlook, the rates are restrictive, and we want to protect the economy. He's also really focused on the balance sheet as well as a tool, which is adding to the restrictive conditions on the economy. So they all want to lower interest rates. I think they all want to preserve somewhat of
Yeah,
Fed
3 minutes.
independence as well. But there's a good case economically to be made right now for lowering interest rates and for doing, some substantial cuts, which is we have these type rates. And while inflation's picked up a little, not really much. It's been in a range, and the 2-year yield.
What that hamster? You need to trade futures, man. Stop doing options.
Not sure how much of a comment it is about the consumer at large, but you could add it on to Tapestry and some other things we've had in the last couple weeks.
It's been a tough category. They also, by the way, and I'm trying to track this. Others have mentioned this as well, but Cody did mention weakness in the Hispanic consumer segment. Something that
I did get my Tradify eval, so I'm gonna save that for CPI in September.
12% decline in the consumer beauty segment, which has the drugstore brands like CoverGirl. Remember, they made that big deal with P&G a few years ago. It owns this business. The prestige business did a little bit better, but it's still declining. That's the Kylie Cosmetics. Reported a 0.5% decrease. They talked about seeing an inflection point in the second half of the year, but it wasn't convincing enough. They're trying to.
It's going down.
The CEO, she talked about Treatonomics. We want to play into the booming Treatonomics trends. Consumers looking for a mood boost in a highly uncertain economic backdrop. They're having new fragrances. They're trying, but clearly, market taking it down 21%. Disappointed.
Also keeping an eye on shares of NVIDIA. How can we not, of course? I'm not getting my quotes here, so.
Me neither.
Really? Yeah, fact says something's going. I hate that. So let's take a look. I don't know, maybe the charts seem to have to change. But I mentioned NVIDIA, of course, earnings next week. Very important, as our viewers well know. But also a story in the FT, guys, I'm sure you saw, saying China has turned against NVIDIA AI chips after insulting comments from the Commerce Secretary, Howard Lutnick. And apparently that took place on our air about a month ago. You can take a listen.
We don't sell them our best stuff, not our second best stuff, not even our third best. I think fourth best is where we've come out that we're cool. So you want to sell the Chinese enough that their developers get addicted to the American technology stack. And that's the thinking.
And that is the thinking, of course, and Jensen Huang shared that thinking successfully with the White House, getting the ban overturned.
All right, it's coming out. Couple seconds.
But one of the key questions is going to be whether, in fact, there is significant demand for the H20 or whether there's an ability to replace it with some of the domestically manufactured chips from the likes of Huawei and others. We don't know. There have been reports that they've been pressuring the likes of ByteDance or Alibaba and others who are running large language models to perhaps cut back. And when it comes to inference, the H20 is obviously quite strong. There may be.
I don't think it's gonna move.
Replace as well there with some of the domestically manufactured chips.
Nothing. They didn't do shit.
The question becomes, can they return to the same market share they had?
Oh no, it's coming now. It's moving.
And of course, don't forget they're going to be paying 50%
Gold went long.
to the U.S. government. So
There's this lingering notion.
There we go. Keep
Chinese
dropping.
are trying to find time for their own technology to make it understand whether that's
Yeah.
or deep
40 points. Yeah. I'm not gonna long yet. Yeah.
difficult to measure. So
Ooh.
I think
Ooh.
certain experts
Damn, why didn't I save my YOLO for this?
be ahead, but they're far behind. And again, you're dealing with difficult to measure. They do have a lot more.
I'm tempted to go long. Yeah, I got long on that one. That's a nice 60-point drop. Yeah. Let's hope I don't get caught. Oh wow.
filled.
Order filled.
Order
Order filled.
Nice.
PMIs all over the world. Let's get your X intel.
Important data of the morning. Launch yields firm up here. S&P Global. These are the PMIs for manufacturing and services, and include the composite.
Order filled.
Order filled.
Order submitted.
Better reads may be more precise, but these are not.
Order
Order
canceled.
filled.
Order 50 for manufacturing, not to be 53.3. That is the best since May of 22. It reverses.
Oh, it's good data though.
Order submitted.
Obviously, it's not only it's the best since 22.
There we go. Oh, yeah. Oh, got out. Oh, got out.
Order submitted.
Yeah, it's good data. So I'm not sure why we don't. There you go. Wow.
This will be equal to where we were in December of last year.
Order
You're finding
submitted.
a higher read, you're going back to April of 22. So these are very solid readings. Interest rates moving up just a smidge. Do remember.
Dude, that's a huge pump. I was long at 98. Dang. Wow.
Especially with that service number as solid as it is. Squawk on the street will return. You guessed it, after a short break.
Oh, good. Got that long. Nice. That's good. Mine's 198. I was red. I think a lot of people are gonna blow up in that jump and in that pump.
Or after school. Or a sitter for date night. You don't have to hire just anyone. You can find a background checked caregiver who's the right fit for you. Join now at findcare@care.com.
I made a promise to my daughter that I would get my college degree. I had 20 years of experience as an HR professional. I had reached the ceiling. So I enrolled in UMGC. UMGC removes every barrier. Everyone treated me like a person with individual needs and met me where I was. I would not be the person that I am today, the mother, the business owner.
You catching that long gambit? I hope you did. Oh no. That's not good.
Retiring wealth isn't a guarantee, it's a goal. It's easy when markets are going up. But what about
No more TPT left? I thought you were close to passing.
Retirement Survival Kit, featuring your guide to surviving market volatility. Our stock market app.
You need one?
Fisher Investments Difference. 3 indispensable guides. Yours
Oh,
free.
that.
Calling 1-800-5317.
So you have nothing left?
Fisher Investments'
Oh.
disciplined approach will help
You want another one? You sure? Alright.
These are structured so we do better when our clients do better. Free retirement survival kit. 1-800-213-5317. See if
Oh man.
retirement's on track. If your portfolio is $1 million or more, call Fisher today. Call 1-800-213-5317.
Okay. Next week's end of the month, so it's gonna be worse. Yeah.
The business of sports, music, and entertainment. Register now at CNBCevents.com.
I was just chopping now.
Keeping an eye on how this tape has affected some recent IPOs. Crypto's opening day high was 142. It settled into roughly half that range. Watch bullish as well. Another high-profile one in the last couple of weeks. Opening day high 118 has also settled about 50% below that intraday high on day one. As for today, Walmart, the big S&P laggard after Target was one of the worst S&P laggards yesterday. We're back in a minute.
Oh, that drop again.
Design is going public. RP's craft is going to define the way that society interacts with technology. It's creative, it's vibrant, and it's global. Design is everyone's business.
Yeah, I don't think I can win. I want to win. But yeah, it's better than doing the codes on the stream because those bots will steal those codes. Yeah. But the forums is a lot better though. That's crazy. That's no news. Just last 2 days like this. Yeah. Let me see. What's that data? No, there's no data. Oh, there's another one coming out. Coming out at 10. Yeah, home sales coming out in 7 minutes. You passed that yet or no, Chris? Yeah. Nice, nice. Oh, thanks for reminding me. I haven't touched my trade A.
The Nissan Rogue takes head after him. Punishment remains pressure. And exposed to excessive wear. Number one in your vehicle clock. We put it through the worst, so you get it fast.
Into his second stint as UNH CEO, Stephen Hemsley faces multiple challenges in his efforts to turn around the nation's largest self-insurer. Let's get to Bertha Coons this morning at HQ for more. Morning, Bertha.
Morning, Carl. During his first 10-year stint as CEO of United Health, Stephen Hemsley was all about building the company's Optum Services division into a healthcare juggernaut through acquisitions, which saw profits grow more than 200%. Now, his focus is a major rehabilitation of United Health's struggling Medicare program, its embattled Optum Health Physician Union, and the company's reputation with allegations of billing fraud and public criticism in the wake of Brian Thompson's death last year. On last month's earnings call, Hemsley said, "We've embarked on a real cultural shift in our relationship with regulators and all external stakeholders and intend to be proactively engaged, constructive, and responsive," he said, "to the concerns of stakeholders and our engagement with them." To that end, June, Hemsley announced that they've hired outside auditors to look at United's business practices. In July, the company initiated a meeting with the Department of Justice, and on the 24th announced that there is indeed a probe, and it is cooperating with investigators. And yesterday announced a public responsibility committee on the board, which will focus on regulatory and stakeholder issues. On the business side, Dr. Patrick Conway, who had become the CEO of Optum's division in April, now also is chief of the Optum Health Physician Unit, and after reporting a second quarter profit miss and new lower full year guidance, Wayne
Morning, bud.
will replace John Rex as CFO starting next month. Two positive developments: the company finally was able to close its $3 billion acquisition of the Genesis system, and of course last week's big news that work here at the company puts it on pace for its best month since 2008. Guys.
Yeah, I mean, I think when the Berkshire filing came out, people thought, no, is it a good deal, right? Has it been beat up too much? Is it too hated? Is it too cheap? Are there signs that there's a turnaround here?
Ooh, that drop. What the hell? Oh, man.
Hopefully they have got the pricing right.
This is coming on 3 minutes, man. I'm scared, but I want a long. Ouch. Yeah, I should not go in.
ESPN Chairman Jimmy Pitaro on the Sports Network's new direct-to-consumer streaming service that is launching today. Don't go anywhere.
Yeah.
Dear Dr. Kenny, I used to think I was never meant to be beautiful. I was teased because my team. I didn't like the person looking.
That drop just came out of nowhere, though. That's just weird.
Team worked within my budget and helped me feel confident in the plan we made together.
You didn't get caught, did you?
Congratulations.
Yeah. Okay. I don't know why we keep longing. Today's like so the ripped. We might. You got 1 minute left into the data. Yeah. I hope Van didn't blow his shit. He was up a lot last night.
I'm Jay Jackson. I'm the CEO of Abacus Life, and for almost 20 years, I've been purchasing life insurance policies from seniors just like you. In fact, you can use the free policy value calculator at abacuspace.com, and in just seconds, you can learn what your policy might be.
All right, 1 minute, guys.
Get real
Good morning, Isis.
Thanks for walking us through the plan.
Have fun with Lycia's son. Doors connect us to what's important. A dedicated fidelity advisor.
Order filled.
Order filled.
Ooh, that's my law.
Order submitted.
Build a personalized investment strategy.
Order canceled.
There we go. I'm out. He long at lower day at 75.
Ridiculous enough being corporate types.
Rockstar move using Workday to handle all our AI agents.
Well, watch me handle my agent, Gary. Bubbly water, no bubbles.
Order
Order
filled.
filled.
The huge.
Order filled.
Order filled.
Target
Order filled.
Wow. That was nice. I caught that. Yeah, I caught that pump.
Order filled.
Order submitted.
We got together to talk about where our business goals align. There was just every possible win in this partnership.
It's an opportunity to learn
Oh
something
boy.
and get really honest feedback from peers.
Guess that was data, huh?
That's the magic of
Order submitted.
You see this CEO council. It's how you create change in the world. Explore
Order canceled.
Order filled.
Order filled.
There we go.
Order filled.
Order filled.
Order submitted.
Caught that too. Almost green on my 150 eval. Was down 2,000. One NQ at a time.
Utilities and fairly energy confidence right now. Everybody else is lower, so the technical continues.
I noticed something weird on the eval. Even though it's end of day, it still becomes static after 4,500. So that's actually, yeah, I didn't know about that. I thought it was only on the funded, but I guess on eval it becomes static too. Because the next day I still have to send buffer. Take profit. Oh, that was a good long. Let's buy the dip.
2% to a seasonally adjusted annualized rate of 4.01 million units. The street was actually looking for a slight decline, so that's a beat month to month. Sales up 0.8% from July of last year. The discount is based on closing, so it's most contracts signed in May and June when mortgage rates were on a decline. There were 1.55 million homes for sale at the end of July. That's up 15.7% year over year and represents a 4.6-month supply at the current sales pace. Despite more supply, though, the median price of a home sold in July was $422,000.
What a pump. That's 100 points.
But a new July prices have been up annually for just over 2 years. This may be a turning point, given that very, very slight increase. Now, sales were strongest in the Northeast month to month, weakest in the Midwest, which is a little weird because the Midwest is where homes are cheapest. First-time buyers dropped.
Let me see if bot's gonna go long yet. No, it's not gonna go long.
Days on market rose both for
Not yet, at least.
31% of transactions, up from 27% the year before. Realtor's chief economist Sarah noted that is a very unusually high level of all-round sales. Okay, thank you, Diana. Yeah, wanted to say hi. I'm Diana Ola. Walmart, top story in the consumer world, in the stock market. The numbers missed estimates on the earnings front. The stock is lower right now, but a lot of that miss on earnings was due to one-off factors because sales were actually quite good. Here's the look at U.S. comp sales, very key. 4.6%, so it was a little bit of a step up.
No more data. That's it.
And Walmart felt so confident about it that they actually raised their sales guidance for the year, raised earnings as well, better foreign exchange issues there. Look, Walmart's dealing with tariffs, as all our retailers. The CEO, Doug McMillon, talking about on the call how they're seeing the impact on consumers. Listen.
The impact of tariffs has been gradual enough that any behavioral adjustments by the customer have been somewhat muted. But as we replenish inventory at post-tariff price levels, we've continued to see our costs increase each week, which we expect will continue into the third and fourth quarters. Not surprisingly, we see more adjustments in middle and lower income households than we do with higher income households. In discretionary categories where prices have gone up, we see a corresponding moderation in units at the item level as customers switch to other items or, in some cases, categories.
Taking a lot of share and doing very well. I talked to the CFO about this, and we went on tariffs for a while. John David Rainey saying we worked hard to minimize inflation overall. Just to give you a sense of whether we're seeing inflation in goods, Walmart had 1% inflation year over year. That includes goods and groceries and everything else. It was 0.5% last quarter, so a little bit of a pickup, but still well below the Fed's target and the overall inflation rate. He said there are areas we've had to raise prices and areas we've been able to mitigate tariffs and completely absorb that. So they were dealing with the cost increases, but as I mentioned, they have a lot of scale.
Yeah, 280 is gonna hit. A little dips I can go in long. On which one? PPT? It's 150 though, right? 150K? Good. No, at least you passed one. That's good. Yeah, how long you have to wait? 4 more days? 3 more days? Dang, that's long.
They keep pointing though. Upper income households contributed the largest gains.
How's your Lucid that hit DLL? YOLO those on NVIDIA ER next week. It's Wednesday.
Haven't done that for basically the entire year ahead of the Fed chair's speech at Jackson Hole tomorrow.
No, I don't copy trade. Oh no, it's Project X. No, I don't copy trade those yet.
thinking about you and sort of your
Yeah, on Project X, it's easy. It's a lot better than the other Tradeovate one. I actually like Project X copy trading.
Yeah, I think it's about the meeting in September. I think there's a concern that maybe it's not 80% after all at the odds of a Fed.
You got out, right? You long? Yeah, nice. That's a nice long.
So they got one surprised that the inflation numbers were a little bit high. I think they're to be up 100,000.
It's more about
660? Oh no. Was it funded account or just eval? Oh fuck, that sucks. Oh yeah. You can make it back. You still got time.
Suggest that it's taking longer to get a job, but that may be related to companies concluding that they want to kind of hold off on hiring until they figure out how AI and other technologies might substitute for labor or augment the productivity of the workforce they have now. So it's a very funky labor market. But on the inflation side, it's not all about tariffs. The services inflation rates and the CPI and the PPI were kind of annoying. They were kind of stuck at 3 to 4%, and that's okay if durable goods prices.
Oh, so ETF is 80% off and then some cheap add-ons. Yeah, but no fast track. No. That's.
The economy is resilient, and we haven't quite gotten to 2% inflation because of the interruption with the tariffs. So there's no reason for the Fed to lower interest rates. Earnings are clocking in at an all-time record high in the second quarter, and the growth rate, instead of being like 3%, is more like 11%. We had the same thing in the first quarter. Earnings have been
300, huh?
strong, which is kind of puzzling.
We hit 300. Bot's gonna go long if we hit that. Yep, there it goes. I heard the bot. What the hell? Never mind. Google is killing it now.
In the coming days, and we'll keep this one brief. Hope you come back soon. Good to see you. Absolutely. Thank you.
After the break, Candace interview with Disney CEO Bob Iger, ESPN chair Jimmy Pitaro on ESPN's new streaming service, the state of the consumer, media competition, and much more. David's got that on the other side of the break. Walk on the Street. We'll be right back.
A secret hoard of 1932 $10 gold Indian coins have been found. These gorgeous 1932 gold coins are as bright and shiny as the day they were struck, and less than 400 of these gold coins are available. Coin experts are calling the secret U.S. gold coin discovery a once-in-a-lifetime opportunity, and you can own a piece of a hoard. When you call, you are guaranteed a 1932 dated gold coin featuring Lady Liberty with an Indian war headdress and a majestic eagle. With limited availability, you must call now. These 1932 dated gold coins are still in uncirculated condition with brilliant luster. That is
Yeah, looks like we're going long soon.
Call 1-888-870-6353. Call now and you receive a free bonus over a $55 value, free with every order. Call 1-888-870-6353 to secure your 1932 $10 gold Indian coins before they sell out. Don't wait. You must act fast. Call now.
Stocks in the market is very simple. These are stocks with good fundamentals, a great story, and technically, they're in the process of rising higher. Everyone needs to invest. Cost of living goes up every year. The purchasing power of the dollar goes down. Assuming we're all going to be here for a very long time, we're going to need more money. Stock market is how that happens.
Join ProVoice. Limited access to John Frost, best stocks in the market. That's dnbc.com/best stock.
So sorry. So this is your problem.
Orders
submitted.
I put a long at 260 if we hit.
Take one S for $2.99 a month.
You already in the long? Yeah, I'm gonna wait a little longer. Nice. There we go. Bot just went long now. Bot long. Let me replace this. There you go. I'm gonna join the bot. Got 70. Yeah, I might come back.
Ringing the opening bell. Thanks to you both. Happy to see you live in person, Jimmy. Let me start with you. You said, and this is a quote I think you used yesterday to the employees and the like, this is a defining moment for how sports are experienced in the digital age. Why?
Big day for ESPN. Big day.
No, it took off without me. Fuck.
First is
Fuck you, bot.
47,000 live events. We have the best sports rights portfolio we've ever had. So that's part one. And then part two is significantly enhancing the ESPN app. Really, at the heart of this is more personalization, more interactivity. The app will be enhanced across connected televisions and also, of course, mobile and tablet with a ton of new features and functionality that we couldn't be more excited about.
So in your mind, that is a defining moment for ESPN, a company you've now run for quite some period of time?
Absolutely. We're approaching our 46th year here, and I would say that
You make good money, right?
the biggest days at ESPN, if not.
You make good money on that?
This is something that fans have been wanting. They've been asking
Nice.
for many, many years, and our mission is to serve the sports fan anytime, anywhere, and we're going to deliver.
It's funny, I noted earlier, I think it's 10 years ago since that August conference call where you first mentioned perhaps some weakness at ESPN.
That don't sound good.
And here we are. You know, I'm curious now, what does success look like for you now that this has begun?
Please. It's not Apex, right? Is it Apex? Oh my.
Can you define it for us? Because my understanding is you're not going to be sharing.
Is that the one near payout?
With investors.
Oh, so your buffer is better. Oh.
Suggested that
Oh.
We were starting to see erosion in what was then called traditional television bundles. And that began a process at the company to ultimately pivot in the digital or the app-based direction. And obviously, we've made huge progress since then.
That sucks. I'm sorry.
Yet another gigantic step in that direction.
Is it still alive or is it gone? Oh, yeah, you having bad luck in Seattle lately.
Sports fans in particular will be excited about it.
Are you leaving today or tomorrow?
Continue to evolve and continue to improve.
Tonight. That's
over
good.
time. And in fact, with the data that will be available, it will improve even more as sports fans are served what they want to watch and what they want to see the most. We do break out sports as an entity, as a company, and so we do report ESPN as its own entity, and there's that obviously that gives people the ability to measure how we're doing in our sports business, and this obviously is a critical part of that business. Let me also emphasize the fact that as a company, we're now agnostic when it comes to linear television and digital television, with digital content. We manage them together and holistically, and so we don't really measure them as much individually. We look at the whole, and that's what we will do here. So we will continue to obviously improve what we're offering sports fans, and obviously we believe that this will contribute nicely to ESPN's bottom line over time as engagement grows, for instance. But we don't feel that the The way to measure this is immediate.
Oh, you went to that Starbucks one? I went there. I didn't. It was crowded as hell.
So yeah, just I wanted to understand. So we're not going to get
No, never. I went to the one in Seattle. I thought it was neat, but it's just way too crowded when I went.
be able to measure it the way they've become accustomed, and certainly did for example, for Netflix for 15 years until very recently.
Yeah, that was me. 2 weeks. Oh, there's one in Tokyo? Okay. Yeah, I'll be there in 2 weeks, 2 to 3 weeks. I need 270 hits so I can long.
Obviously critical in terms of its future, and I think it'll have a positive impact. But we're also doing this for our shareholders and also for the fans. Both.
Wow, the pump. What the hell? Too late for me now. Too late. It's done.
But is it enough? I mean, depending on who measures, it's
Order
either 35% or perhaps a bit
Just short.
of overall sports content. That's a big number. But for example, the failed initiative called Venue that was going to bring together.
Yeah, screw the buy. I need to take a trade. I'm gonna short. It's too late now. It's up 30, 40 points. Too late for me. Drop it, baby. There we go.
We're gonna judge ourselves based on the totality of people subscribing to ESPN. That includes subscribers to the traditional ecosystem. So pay television, a digital MVPD. We're looking holistically, and so we still believe that there's a lot of value in that traditional ecosystem where you get so much sports content. Another thing that we've seen, David, from our research is that sports fans, especially younger fans,
I think tomorrow's my last freebies. Now I'm done after that. So that Tradeify is tomorrow.
the sports fan with several different options. I'd start with the Disney bundle at $29.99. You get all of ESPN plus Disney Plus and Hulu for 1 year. Free. Yeah, for 1 year.
Trade day. No, it's fine. It's that trade day.
We announced a bundle with NFL Plus Premium that includes.
No, that's tomorrow. That's the. Oh, like.
And ways to put together their own bundle. Right. And more
Can you do that?
You know, the bundle with is this the end or potentially?
Oh, okay. Let me see how later after today.
But of course, if it makes business sense for us, if we think it makes sense for the sports fan, we will have those conversations. But nothing beyond the Disney bundle, the NFL Plus Premium bundle, and the Fox bundle.
Yeah, I should have kept my short.
In terms of understanding, if we're going to measure it, as Bob said, on the whole, and you said it as well, you can't just lose people from the cable bundle who then go to the ESPN. You've got to get people who never had cable, I guess, to some extent. Is that the audience here? I know it was sort of when Venue was up, at least as a thought, that was the thought. It's going to be people who are never cord, so to speak. Is that who you're going after?
That is definitely the strategy. The marketing is focusing on people that are on the sidelines, people who have cut the cord, or people who have never subscribed in the first place. I will also tell you, this is a really important point. We are adding value to the traditional ecosystem, the pay TV ecosystem, as a part of today's announcements. And what I mean by that is if you are a subscriber to traditional pay television, whether it's Charter or Comcast or DirecTV, you will, through authentication within the ESPN app, get access to all of our new features and functionality, which is a ton of value for the sports fan and a ton of value for our partners.
So, do you have an expectation, though, that that there are going to be people falling off the bundle as a result of this?
Look, we don't know. Like, I don't have a crystal ball. We don't know what the impact will be. Again, just going back, our mission is to serve the sports fan, and we know that the trends are they've been heading towards digital and streaming for many, many years. And Bob and I decided a couple of years ago that it's time. It's time to be present. It's, if our mission is truly to be everywhere for the sports fan, we need to be present direct to consumer. And
we decided at the same time, we're not just going to flip the switch.
Right.
What I mean by that is we are not just going to make our services available direct to consumer. We're also going to significantly enhance the fan experience within our ESPN app.
Yeah, and I want to talk a bit about that. But, you know, Bob, when it comes to sort of the bundle, we were referencing it, you know, the 10 years ago, of course, as well. Benefits quickening the pace,
He.
Jimmy said, I don't think we really know yet. I also want to point out that we manage our television assets as one business, not as individual businesses, meaning we don't manage the linear business and the digital business separately. We manage it as one. It's one group of executives. It's essentially one bottom
They
line.
messed up the account. He didn't get the account, so they just gave him an extra 150K for the messed up. Yeah, they do that a lot. Google knows those account has activation fee. Hope he knows that. He's thinking it's cheap. Oh, it's $30. Let me go buy some more. I went short. Oh no. Oh yeah. When first started futures, Google he took out 6,000 on Apex on one PA. Recently, no. No, I've been blown up. Yeah, gambling nonstop. Now he doesn't read like what you need to do, so he just go max 10 NQ and just blow up or pass. Yeah, and consistency stuff. I think it was up like 10,000 on Apex, but way over 30%. So they gave him a big buffer, and he came back and got like 2,000 payout. Yeah. But if you look at your spending, you actually spend a lot and you keep blowing up. And most people don't have the Excel sheet to put it in, or they don't want to. I have it, and I have a budget every month too.
The ability to aggregate both subscription fees and advertising on both sides, and essentially end up with a business that's actually larger.
Ooh, good thing I got on my short. Dang.
We've watched the continued decline of television viewing or subscriptions on linear television, and that's why we've pivoted so effectively in the digital direction. This is gigantic step for us in that regard.
Understood. You know, I want to maybe come to both of you perhaps on this. I'll start with you, though, Jimmy. $33 billion is going to be spent on sports rights, I believe, this year by streamers and by everybody. And it's only going to go up, one would imagine. I mean, if you want to watch all the NFL games, or at least have access to them, I think you have to spend about $1,000 just to have access to various streaming services. There's certain games that are exclusive. Does the consumer at some
So we do now? Do we just wait to short or jump on the long again? I don't know.
The traditional ecosystem.
Yeah. 3 minutes. 3 minutes is over, near overbought, but not yet.
On top of that, you would be a member of Amazon Prime, Netflix. So I hear you. I don't know about the $1,000. If you were
Peacock got one exclusive game, if you don't want to miss that one, you got to spend another $11.
You're 100% right. But my point there is that there still is value. And again, we are adding value to that customer, the customer that is very happy, you know, in the pay TV bundle.
Right.
Our goal is to drive everyone to the ESPN app. That is the enhanced experience. That is, as Bob has said, the preeminent sports destination. And so whether you subscribe directly to ESPN or subscribe to us through an MVPD or a digital MVPD, we want to drive you to the app. And through authentication, you will get access to a much better sports experience than you see anywhere else within the industry.
Yeah, but you know, and I hear Jimmy, Bob, but I also keep thinking about the price of sports rights, which obviously you guys know better than anybody. Just keep going up. I mean, the UFC just went to Paramount for twice what you guys were paying. You're competing against Amazon. You're competing against Apple. You're competing against Alphabet and Netflix. I guess I just wonder, do you see yourself being able to do that over the long term?
ESPN's in a very unique position, as you know. No one has many rights as ESPN does. No one has as much engagement with sports fans as ESPN does. I think they're competing with us. We're the envy. They envy us and the position that we're in, and we have, I think, an enviable position when it comes to television sports.
Let me know when you long. I'll follow. What's up, Google?
The most valuable. It's led by the NFL and obviously the NBA. Lived that for decades, actually, in my career, and that's only going to continue. And I think it reflects the value that sports.
You know there's activation fee, right, Google? That don't sound good, Gambit.
Position that ESPN is in.
Take a break.
Obviously, with the steps that we're taking, whether it's this step in terms of going in the digital direction, or whether it's the new rights that we've licensed, or whether it's the deal we made. Position, and actually, I should say, we intend to grow our position.
Follow the bot, Gambit. Follow the bot.
Right. We have the ability to afford it, to monetize it better than anyone else. Not just on one platform, but on multiple platforms, in multiple directions.
You may need to, and that may be why you're in an enviable position. But, you know, that said, you're renting this content.
Later.
When you produce a movie and it's forever a Disney movie, Bob, I mean, at some point, you know, you've got potentially irrational actors. I don't know if they are, but if they want to spend at Amazon whatever they want.
I'm already short at 321.
Long-term threat. I see Jimmy's shaking his head here. I don't know. I'll go to you. You want to answer that one first?
Well, look, there's not a lot to acquire over the next several years. You mentioned the UFC deal, as you know.
Too late now. I went long early with a bot, but now it's just too late. They took off. I see a lot of bears in the chat.
UFC in terms of growing that sport over the years. And I also want to be clear, we're going to continue to cover mixed martial arts and the UFC. But my broader point is there's not a lot to acquire.
I'll average down if I need to.
I also want to make the point that, and I get this question all the time, but how did you feel when Amazon came in and acquired Thursday Night Football? My response is always,
Pass what?
Is that bad for the Walt Disney Company and for ESPN? If Amazon is now promoting the game of football, promoting the NFL, bringing new fans, fans, isn't that better for us? Doesn't that mean that more people are going to be tuning in and watching Monday Night Football, this rising tide? That is really my feeling. Yes, the competition is fierce. It's probably
Bot just got 60 points.
There's not a lot to acquire over the next 5 to 7 years.
Yeah, on the long.
We have the best rights portfolio we've ever had in our 46-year history. We feel great about our prospects, especially in this direct-to-consumer world.
Bob, on that note, though, I mean, you and I sat together. All right, go ahead. Yes.
Now average down, we hit 400.
I said it's 50 years ago, working at ABC Sports, and I remember when HBO came in, mostly into boxing. I remember when Fox didn't have any sports. Fox didn't exist, and ultimately they started a network and got into the NFL. And I could name countless examples of new entrants into the space over that period of time, and everybody said, "Oh boy, the sky is falling. That's the end of your position." And I think
Ooh, got that one. Nice.
Look where ESPN is today, with all of the competition that has emerged over the years. I actually think they're in the best position they've ever been in. And now, with the use of this great technology, they have the ability to engage with sports fans on a higher
Let me set up the Lucid race. Everybody thumbs up already, right? I make sure Gambit thumbs up. His ass gonna need it.
I wanted to go to pricing because $29.99 is where you're starting. Bob, you and I sat together. I think it was the fall of 2019. I might have it.
And oh, were you there?
When you launched Disney Plus.
Okay.
And it was $6.99, and now it's $15.99.
I didn't think he was gonna give it to me though, but he did. Yeah, that's my short. Drop it, baby. I'm out. Yeah, fuck the bot.
It's too early. We think what we're going out with, particularly with the what we call the trio bundle with Disney Plus and with Hulu.
Hey, take a break, dude.
It's just an incredible value to consumers. We really haven't predicted or projected what the pricing will be or what the pricing can
What
be.
account are you trading
Our goal today is
that you're trying to finish?
to obviously put in front of consumers.
Oh, I thought you already passed.
Right. So
Oh, you want to get two. I'm still working on mine for a week. I'm not trying to rush it. What a dip. Alright, I'm gonna do this race real quick.
Increased programming significantly on Disney Plus to raise prices, but the market has also raised its prices as well, and we haven't done anything unusual in that regard.
Yeah. Jimmy, I wonder about international, because when I think about the NFL, we're making efforts obviously to have games in parts of the world. The NBA certainly.
Yeah, I'm not gonna lie.
Clearly very important here for ESPN. You know, the more the better.
Yeah.
How do you view that as an opportunity?
It's a great question. What we're doing today is domestic. It's U.S. focused. As we think about the future, it's really Disney Plus. So as you know, there is a tile an ESPN branded tile on Disney Plus in the U.S. and in select areas outside of the U.S. We expect that will continue, and we will get the ESPN branded environment in more countries as we move forward. And you know, we've always been really smart about how we acquire rights. We have a fantastic strategy team that works with our partners, our colleagues around the globe to identify the best rights for ESPN, and that includes ESPN within the Disney Plus environment. But we don't have any plans on expanding the ESPN.
Which one should we do? BMX. We haven't done the BMX yet.
Expanding the ESPN branded environment within Disney Plus.
Right. Now, as somebody who's a Knicks and Mets fan, for example, I need to get MSG and SNY here in the local New York area. Adds a lot of expense, potentially. It keeps me in the bundle to some extent. But what about the RSNs and how you might think about strategically incorporating some of their programming? Is that a possibility, certainly when it comes to Major League Baseball, for example?
Yes, it's a definite possibility. We have recognized the challenges.
If you win this Lucid, save that for the tournament.
Just to back up, ESPN
Connection
is the
lost.
front door. It's the starting point for sports fans. And so, is there a world where we would want a sports fan like you
in here,
going to the
Ty.
ESPN app to access your
Okay.
in-market games? Of course there is. That's very consistent with our strategy. Nothing to announce here today, but I will tell you that the conversations that we've had with Major League Baseball have been very productive and very healthy.
You want to man for the better terms now than you might have been a while back when you decided not to renew?
The commissioner and I have always been on good terms. We've known each other for a long time, and I think I don't want to speak for the commissioner, but we see the opportunity.
Like to that, not to mention fantasy, things of that nature.
Yeah, it's two names for each because of Discord. It's just copy and paste, so everybody has two names on there. Your chance of winning is better, right? What's up, ISIS? Come on, Jay-Z, you need to win. No, that's another Jay-Z somewhere. Look up top.
And yes, Benny. And if you are logged in and you made a connection between the ESPN app and the ESPN Bet accounts, or apps, but you've connected your accounts, then you will see it's the bets that you have placed within that betting tab. And just as important is we provide contextual relevance. So if you're watching the New York Giants playing on Monday Night Football, we will service contextually relevant.
Look, Jay-Z, I see the other one. Agent Jay-Z. You see it? I see it twice. Did you thumbs up, OD? If you did, you should be on there. Uh-oh. 10 seconds. Rosales is winning. Oh no, someone's coming up. No, Isno, you coming back? Oh! Oh, I hope you're watching. I hope you're watching it. Oh, no! LSJN. Wow, I thought you were gonna win. I actually thought you were gonna win. Wow. Thought you were gonna win. Oh man, you're over trading, man.
Yeah, the deal is not closed, but it also has to go through a regulatory process. And that's what we're focused on right now. No comment at all about, whether there's more to come or not. We targeted, obviously, the NFL in terms of our first partner for obvious reasons, given the value of their properties. And we're really thrilled that we were able to negotiate that deal and announce it just a couple of weeks ago. And now we're focused on going through
You hit.
regulatory processes.
Yeah, hit join, I think.
What was the benefit to that deal? Why would you want the NFL to own 10%? I know obviously you're giving, they're getting something.
What? Really?
Getting something in return as well, certainly. But why do that deal?
Well, as we discussed actually back, I think, a couple of years ago in Sun Valley, when I talked about the possibility of bringing partners in for ESPN, we were actually looking for partners that would bring real strategic value to our growth efforts, mostly in the digital direction. And when you look at the content that we're able to license, thanks to this partnership, we believe that this is a big and important step in terms of our, obviously, our migration into the direct-to-consumer space. It's just a great partnership from a content perspective. If you look at what the NFL offers as a network, and the ability to integrate that programming with ESPN, for instance, we think that will greatly enhance the value of the very app that we're talking about today.
Yeah. Guys, before we end here, I did want to come to some controversy, at least, Jimmy. Let me ask you, this Spike Lee, Colin Kaepernick documentary that apparently was shelved or has been shelved. Given the current political climate, there are those who believe, well, that timing is kind of strange. Was it?
You guys still long?
No, absolutely not. We made
3 minutes looks like it's trying to curve back down, so yeah, I'm not gonna long.
Announcements. I think what happened is Spike was I believe on the red.
At least not yet.
This question somewhat out of the blue, and that's
Yeah, there must be something coming up.
Yeah, there were creative differences. We made the decision in partnership with Colin and Spike to not move forward many months before any NFL announcement, and it had nothing to do with the.
Hey LS, you wanna join the Lucid tournament with that winnings, or you gonna just trade it now? Cause the tournament is Monday.
Talking about Sports Center, that what is going to be AI delivered to me. Tell me that the Mets lost again last night. What do I get?
Well, so look, we've led in personalization for many years. We've been prioritizing digital at ESPN for decades. What you're going to see, in addition to everything I just mentioned on the squeeze back experience within a connected TV environment, is also, yes, a personalized Sports Center. So right content to the right user at the right time. Quick story. Yesterday, Bob texted me, "Hey, Yankees hit 9 home runs again." And I said, I know. I woke up yesterday, and of course, I was in the test environment for the ESPN app, and I woke up, fired up my Sports Center for You personalized Sports Center. And the first thing I got was a recap of the Yankees game, and I saw those nine home runs. So this is huge sports fan. This is a product that I've been craving for a long time. And the team's been hard at work on it. I want to be clear, we're launching in beta. Yes, it is AI powered, AI driven. And we could not be more excited about it. But as Bob said, this is the first inning of these enhancements, and it's the first inning for Sports Center for you. We're going to see what's working, see what's out. We're going to take fan feedback as we always do. We're going to learn from it, and we're going to make the product even better.
All right. Well, I only want my highlights from our team win. It's going to do that for me.
Yeah, it's funny that you say that. There's something being considered internally that gets at what you're describing. Maybe next time we get together, I'll give you the update on that.
Yeah, Bob, you know, it's funny. It's a separate conversation, perhaps another interview, but AI, when I hear that, obviously you're dealing with and navigating that as well. I think there were some reports you were at the White House recently because you're obviously trying to protect your own IP while you obviously move into this future. Was there a meeting at the White House about this? And if so, what were you discussing?
We did have a meeting at the White House with the president's AI team, and we were largely talking about issues related to intellectual property protection. But we also made a point of saying that Disney believes that AI will be an important part of our future. We're already using AI in every one of our businesses, and we believe that it will, over time, become an important part or important component of how our company operates. But it's also critical that as we migrate into
I gave him his code, so he should be good. Good shit, Doc.
Respect the creative community, and also we continue to be mindful of the impact it can have on our intellectual property, which you know is essentially the core of our company and what we do and who we are.
Yeah. And finally, Bob, as time goes by, I mean, I mentioned the 10 years since that first conference call. You remember it well. Here we are with the launch of ESPN and the product. Where do you think we'll be, if you can even take me out, 10 years from now when we're talking about this?
I know where I'll be, David. I'll be happily retired. You know, it's an interesting world. We've seen more change happening quicker than at any time during our lives and in any time certainly during our careers. It's interesting, I think back 10 years ago, I guess I just did see a world that was going to migrate in a digital direction, and we began to prepare for that as a company, making announcements in 2016 and 17 and launching Disney Plus in 19 and doing this today, and that will continue. I think it's hard to project right now 10 years ahead. Things are changing too profoundly and too fast to do that. One thing I can predict is that change is inevitable and will continue, and that's thus, I think it makes it just harder to be predictive about it.
Yeah. I'll assume you will be retired in 10 years. I'm not sure I'd want to take the under over, but yeah, 10 years sounds. Guys, very much appreciated. Jimmy, thank you for being here.
Thank you.
Bob, thank you as well for this interesting conversation. Jimmy Pitaro, Bob Iger, let me send back to you, sir.
David, thank you. David Faber, looking forward to talking to you about that on the other side of this break.
Where are you long at, SK?
David's conversation, what Disney shareholders learned from that interview. Plus, the Fed's Jackson Hole Summit kicking off. We're going to head live to Wyoming for the latest on what Chair Powell could say tomorrow. And then later we'll talk to the CEO of online broker Redfin, reacting to today's housing data. Got the market under a little pressure at the lows of the morning, though. Squawk on the Street will be right back.
A secret hoard of 1932 $10 gold Indian coins have been found. These gorgeous 1932 gold coins are as bright and shiny as the day they were struck, and less than 400 of these gold coins are available. Coin experts are calling the secret U.S. gold coin discovery a once-in-a-lifetime opportunity, and you can own a piece of the hoard. When you call, you are guaranteed a 1932 dated gold coin featuring Lady Liberty.
You still stuck on a long? Oh, you're unsure. I went to long, but I'm waiting for a bigger dip. It's just too choppy today.
870-635 to secure your 1932 $10 gold Indian coins before they sell out. Don't wait. You must act fast. Call now.
Some people like doing things the hard way, like doing their finances with a spreadsheet instead of using Quicken. Quicken pulls all your financial info together in one place and updates it automatically.
Wow.
How easy is that?
Some people just have a lot to emote about before they finally love the Squawk Box.
Weekdays 6 a.m. Eastern and streaming on CNBC. Plus,
If you know luxury, it's not just a word. It's important. Soundful mattresses.
You cut, right? Oh, you didn't. You still holding it?
Luxury is handcrafted and assembled in American factories and brought directly to you with our complimentary in-home delivery and setup service, which is why over 90%
Oh, you have 3 MNQ?
would recommend Saga to friends and family. Saga.
Oh, yeah. You don't have much drawdown on that too. No, I think it's on its funded. Yeah.
There's one place tucked away in the mountains, high above and beyond the expected, where you're sure to find it. At Beaver Creek. Book your getaway today.
For those who perhaps have been waiting, you could imagine that, well, now I can get what I need from sports, or I can put something together, and now I'm done with the bundle. I would think it certainly doesn't do anything to
I think yesterday movement was better. Kind of like today.
No, it doesn't do anything to step. But we didn't think that we could, that one entity, one company could do that. But I think what I also want to point out, as you know, that a number of other companies are exiting their linear business completely, meaning they're selling off the channels that serve the linear television ecosystem. We're doing the opposite, actually. We're combining them, which gives us the ability to aggregate both subscription fees and advertising on both sides, and essentially end up with a business that's actually larger and more impactful than it would be if we were to separate them completely.
That was, of course, Bob Iger, the CEO of Disney, just with us. He made the same point the last time we had him on as a guest after earnings. It wasn't his last, in terms of at least getting, not afraid of linear, staying in it, and fighting through, so to speak. I think it is interesting that when we want to measure this, we're not going to be able to do so just through sub-growth at ESPN Plus, but we're going to ultimately need to look at ESPN as a whole. I think the hope is that they, as Jimmy Pitaro made clear, Sarah, access new customers, those who already or never had a connection to cable, as opposed to those who simply are dropping their cable to pick this up, because that doesn't help them in terms of actual growth.
So what's at stake there for Disney? I mean, the stock has done okay. I mean, it's had a good 12 months, up 30% or so. It's off the post-pandemic highs from a few years ago.
Right.
But how much is riding on this?
Well, a lot, because it gets back to the growth of direct-to-consumer. It's not just really about ESPN Plus. Obviously, that is the focus. But
He's still trading.
Disney and Hulu, the package now that's available to people that we talked about earlier in terms of getting both of those other services essentially for free, so to speak, in terms of paying the $29.99 for all three of them. Will it lead to growth overall in that bundle? What do they need to add? How can they compete? And then, Carl, you get to that bigger conversation about sports rights, which only go one way, and whether they have the wherewithal to really compete. And he says, Iger, that they're in an enviable position, but we all know the capability of Amazon, Apple, and Alphabet to spend whatever they should choose to do so on these kinds of sports rights.
Yeah, I love that. Your question about irrational actors, and his answer was, this inventory is limited, but that proves the point that there's a limited thing that's going to get chased by people in some cases with really deep pockets. As for the share price, we know it's trading at levels it was trading at 10 years ago. Some have pointed out that his answers to you kind of were a tacit admission of managing decline on behalf of the whole industry, albeit in this
5
case,
NQ? Oh no.
Approaching it a bit differently, not spinning things off, not trying to get them sort of away
You didn't
from the way
you didn't blow, did you?
but that is what it is now.
Oh, okay.
I
Oh.
think the
Dang, that's it? For 5 NQ?
that with all the different features
Oh, okay, okay.
for ESPN
That's cool. So LS gonna join the Lucid tournament without winning.
Sports fan, what you have to spend right now to basically be able to see all of
Connection
your favorite
lost.
sports.
We're talking Apple TV sub price increasing to $12.99 a month from today. We got the news about the PlayStation yesterday, $50 right there. I mean, a couple of those and services PPI kind of makes sense, right?
They had some must-see TV, so I guess they feel confident that they can raise prices. But on sports alone, I mean, how many networks do you have to have, and how much money do you have to spend?
You know, again, we can look at the numbers.
What the hell? My Ninja Trader gets froze. You start.
About 1,400 a year if you want just access to at least all the championships of all the major sports. So that adds up.
Yeah, no kidding. All right, well, it was a great interview. David Faber extended interview with the head of ESPN and Disney. Meantime, the Kansas City Fed Economic Policy Symposium starting officially today in Jacksonville, Wyoming. Fed Chair Jay Powell set to speak tomorrow in this hour. We'll bring you those comments live. Let's get to Steve Murray.
So Jay Powell tomorrow.
Who's in Jacksonville with more on some of the conversations leading into Powell. Steve.
There's definitely talk in the hallways here about the Lisa Cook allegations, but the more important focus for investors is the speech tomorrow by Fed Chair Jay Powell, and he faces a difficult task. Among the issues that he has to deal with is possibly discussing changes to the long-term strategy that could be announced as soon as tomorrow, presidential and market pressure for a rate cut, higher inflation numbers, as well as softer labor market data, and a divided Fed on the issue of those rate cuts. On the divided Fed, Kansas City Fed President Jeff Schmidt telling CNBC that he's open to a cut, but continues to be concerned about inflation.
It seems like that last mile is pretty hard, and I'm one of a lot of folks that believe that
Oh man.
a real hard true cost to that last percent of inflation that's in the system.
I'm gonna go short. 3 minute looks like it has a dip.
Might see tick up, I would say.
But I'm not gonna short.
The inflation numbers
I
probably
don't feel like trading right now. It's nothing good.
to do.
Well, first of all, let the data talk. There is more data between now and that September meeting that could adjust market expectations for him. Suggest a cut is possible, but not necessarily promised. Not abandon the 2% inflation target, even while the Fed is away from it. And say that perhaps the Fed is still restrictive even after a 25 basis point cut. Try to limit the expectations to not more than one cut. Futures markets still have an 80% chance of a rate cut in September, but there's a 20% probability of no cut. And that's risen in recent days. So there is some hedging out there in the market that Powell won't very clearly deliver that dovish guidance that markets seem to want. As he said,
I'm just waiting for a good setup. I don't see anything right now, so I'm not trading yet.
Clear the statement that the majority of participants were more worried about the inflation risk than they were about the job risk. Now, yes, we had a weak jobs report since then, and so the market was all excited that we would get
Look
the
at that
rate
pump.
cuts. But Steve, it sounds like from your conversations and with key voting members like Schmidt, they're not so convinced that the job risk is going to outweigh the inflation risk now.
You know, and I'd just like to point out, I love the fact that Schmidt represents this continuum, going all the way back to Bill Poole and Tom Honig and Elizabeth, I'm sorry, I'm just blanking. Esther Joyce, right. This continuum of Fed chairs, presidents of Kansas City that have been sort of on the hawkish side, and definitely Schmidt, Mussolini was sort of in the middle. I don't know which way to go here. And you're right, the job came along, but let's talk about Bostic's comments this morning from Atlanta, where he said changes to the immigration and the labor force growth mean that maybe the run rate is 50 to 70,000 to keep the unemployment rate unchanged. So that lowers everything. So in that context, Sarah, the jobs report and the revisions.
All right, hit 300 again. I'm gonna short. I mean, put it in. 300 is short.
Order submitted.
She's scheduled to be here. She is going to arrive. A lot of people see it as very political, and they wonder what happened, and they're kind of reserving judgment for Lisa Cook to have her say, which I would say is unlike Mr. Pulte and Mr. Trump was demanding.
her resignation right away. Maybe as we talked about yesterday, that it's there and it's a problem and has to be dealt with, but maybe there's an explanation that we haven't really heard. That, as you know, she said yesterday she would not be bullied into leaving her seat by a tweet.
Yeah, in her
Get
statement,
out.
I thought one part was really important, which she said
Nice.
that the allegations
Nice short spot they hit. I don't know anymore.
to be relating to their time at the Fed, and whether that was sort of a hint at that.
I honestly haven't thought about that, Sarah. I think that's a very clever reading. I have to tell you. I think that it would be about her actions at the Fed rather than before. It would still be a problem that it happened, and why it happened is still interesting. But I think that's a clever reading and an interesting distinction that you make.
Yeah, we got to go back to the law books on all these rules.
I did have your comments this morning, Steve, on trying to assess her would-be legacy one day in her career in full, and not just about this particular episode. We'll see what we get in the days to come.
Yeah.
See at least from the Jackson Hole. A lot more from Steve next couple of days. When we get back, Redfield's chief Glenn Kelman joins us after this morning's better-than-expected existing home print. Mike Movers begins after this.
After doing it all,
Order
the
filled.
Lazy Boy recliner takes you from zero
Orders
to
Yeah, I'm short.
melting in all your comfort that doesn't quit. Feel for yourself at Lazy Boy. Go zero to lazy with full body comfort fully made for you. Lazy
Order
Boy.
canceled.
Live the lazy. Thanks for walking us through the plan.
Order filled.
And I'm out.
Doors connect us to what's important. A dedicated advisor can help you open those doors. Backed by a team of specialists, they'll help you build a personalized investment strategy. Doors are meant to be open.
When logic bends, when certainty's shatter, when left is right and right. Order submitted. Which way do you turn? Go beyond the headlines. A trusted global perspective. The economists know which way is up.
What if the future of finance wasn't built around averages, but around you? At Abacus Global Management, we're reframing the very nature of financial planning around the most personal data point possible: your lifespan. Abacus is the originator, the market maker. We're not just participating in the space, we're reshaping it. As a technology-driven asset manager, we're empowering our investors with an integrated system to take command of what matters most: your time, your future, your financial destiny. While legacy firms cling to static models and outdated assumptions, we move forward with precision, agility, and a vision rooted in reality. Your reality. This isn't finance as usual. This is control in the hands of those who dare to lead. This is a new era of investing built on the truth of your life. Welcome to Abacus Global Management.
You put everything into getting it right, from launches to milestones and team recognition. With expert support, quality products, and on-time delivery, 4imprint makes sure your brand shows up strong. Visit 4imprint.com. 4imprint, for certain. Oh, so you corporate types are rock stars.
Well, that's as ridiculous as rock stars being corporate types. Workday AI agents are making you all rock
Dude,
stars.
this is boring.
So that's a slide. Any questions?
And now with Workday, we can manage our people and AI agents. I'm sorry. Who are they? Oh, interns.
We're interns.
I'll see you tomorrow.
It's been a season. The next step playoffs conclude at the Tour Championship. Streaming on Peacock.
So itchy to short, but I know it's gonna be bad if I go in.
Plus, a new $3 billion drug manufacturing plant prepares to open in North Carolina after 5 years of construction. Perhaps
That thing's all mixed up. Green, red, green, red.
inside the facility with a look
I'm trying not to force any trade and just take my time. I don't want to end up blowing anything. I got a $28 payout on TPT only. Ah, long way to go. But I might just join in on this short. 40. Nah, fuck it. I'll just do one for now. In and out if I can. Oh boy. What did I bought short at 12? Okay, I short at 17. I can average down. Later, buddy. Oh, wow.
I want this to be the last time I worry about my smile.
With Clear Choice Dental Implants, this is the last time. Because you get the security of our lifetime warranty on premium arches.
For real. I'm stuck in a short. Gammy always plays heavy.
Gina Costa, looking simply stunning. What's this?
I check the 3 minutes. 3 minutes still got downside. Oh man. Oh, this squeeze is bearish coming up, so let me try my pro so I can make some money. I was short of 45, but it didn't hit. Yeah. I mean, it can dump so I can get out the other account. I only got one MNQ though, so it doesn't matter.
See those guys.
There we go.
What about us now? Luckily, there's no safe look, simply safe.
Or not to buy? That is the question.
Got on that one. Move it up there.
So if your business is in it to win it, wait.
We believe that ESPN should be measured as a whole, and not just, look, we didn't break out individual channels.
It's choppy today though, like very choppy. Mm-hmm.
This is an important component of ESPN, obviously critical in terms of its future, and we think will have a positive impact.
I think he'll make it move tomorrow. Yeah. But I don't have anything to YOLO tomorrow.
Disney's chief Bob Iger this morning talking to David Faber for an exclusive interview a few moments ago.
I should just be done. This can't trade today's chop.
A lot of people need to replace their windows or patio doors, but they put it off because they think it'll be
You didn't
too
take profit?
Hi, I'm Ann Romer, and here's Michael Smith from Renewal by Anderson. You really work with the customers to find affordable solutions.
We do it.
Oh.
We're the replacement window division of Anderson, one of the largest window manufacturers in North America. So we can usually offer our customers larger discounts and better financing than smaller companies or contractors.
Other window companies don't offer your same window and door installation method.
Our installers have installed thousands of windows. Our windows are manufactured to precisely fit your specific window openings. Being custom built also means if you have any beautiful trim that you'd like to keep, we can install your windows without impacting that trim. You won't get this with most vinyl windows.
And you offer a free window and patio door diagnosis?
We do. We'll come to your home and assess your current windows, show you where you might be losing energy, and take measurements. Then we'll give you an exact price quote.
So you're not a high pressure.
Ooh, come on, get me out. I'm done. Let me get out.
So now I just want to help homeowners make their
Order
homes more
candle.
beautiful and comfortable with the right window.
Order submitted.
No, no, no. I'm trying to get out. I haven't got out yet. 49, 249.
Before August 31st, buy one window or door and get the next one 40% off. That's 40% off. Plus, get an additional $45 off each window and door with no money down.
It's all about sizing. If you don't size too heavy, you won't blow as much.
Call before August 31st to schedule your appointment. 1-800-918-0800.
I keep telling Gambit that, but
1-800-918-0800.
just trying to pass hurry up and pass it. That's why.
Why should you trade options rather than stocks? Because they offer higher returns, are cost effective.
Oh, come on, go back down.
I have a couple of stocks, but I don't have many of them anymore. So I highly recommend everyone gets John and Pete's book because there's nothing else out there.
Holy shit, that drop. Wow, that's a nice drop. I got out. I'm green. Negative. Well, I was negative like 600 on this tick. I'm green. Our Ninja traders keep disconnecting. Let me try to short again.
We got together to talk about where our business goals align. It was just every possible win in this partnership.
It's an opportunity to learn something new and get really honest feedback from peers who are experiencing the same exact thing.
That's the magic of not just CNBC and the CEO Council. It's how you create change in the world.
Explore CNBC Council memberships today.
guys.